All right, 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 all right. It's 2022. Welcome to Millionaire Challenge. All right, I'll be your host today, Joel Harrison, and I haven't done a Millionaire Challenge video in a while. Don't mind the shades. All right, I got to keep this light out of my eyes, but we're going to wait for a couple of more people to join. But the format for Millionaire Challenge is if you have any stock that you want me to look at, I want you to write that stock in the comment section. Now, this is an interactive session. That's what you guys get with the Insider Trading Room. All right, if you're watching this from YouTube or if you're watching it from my page, all right, you guys need to join the Insider Trading Room. It's a room full of real traders that are buying and selling the market. All right, and we're legally sharing information with each other and knowledge. It's the best trading room on the planet. All right, and it was one of the first rooms that was created when Facebook allowed groups. So as we're waiting for more people to join, I want you to uh, I want you to grab a pencil and paper, take some notes today because we are gonna fly through a lot of your stocks. So what you get with me is I'm an expert in stocks, options, futures, and cryptocurrency. Any questions that you have regarding the market, I'm going to try to answer it to the best of my abilities. And I'm going to teach you guys how to have the right mindset to get to $1 million. Now, you got a lot of people that talk the talk. All right. I'm one of the few that have walked the walk. All right. I've shown receipts for years. I try to lead by example. And, psychologically, I try to get you guys through this market. Like, what are we going through right now? If you've been in the insider trading room, we said that this was going to happen before it happened. All right. So you can prepare yourself, you can get educated, but you got to get your mind right. So to get your mind right, I want you guys to watch this. All right, all right. So it's 2022 now, and what you guys are realizing when you're going to the store, when you're going to the car dealership, even education, inflation is creeping in, and the prices of everything is going up in price. Shoot, a brand new Honda Accord is going to run you about 40 or $50,000 for a brand new Honda Accord. You want one of those nice big boy pickup trucks? You're going to pay a cool 100 grand. All right. So you got to keep up with the Harrisons. You got to keep up with the Joneses. You got to keep up with the Kardashians. You got to invest in the stock market. All right. So, when I do this segment, it's not to, it's not, I don't want you guys to stop doing what you're doing. It's just that most of you are approaching the market the incorrect way, and you're learning from what I call simpletons. And I say simpletons because most of us, when we come into the market, we see the market one way, right? And I don't want you guys to come into the market like a simpleton, like I did. I was a simpleton. When I call out different people's names, I don't want you to get offended anymore. I want you to understand that I have walked the path that you have walked. All right. But the difference between me and you is that I kind of understand what's going on with the market and I know how to position myself. And I don't look at the market in one way. I look at the market three different ways. All right. And if you can look at the market three different ways, you can take advantage of everything that the market offers to you. All right. The stock market is the only market where you can make money when the market goes up. You can make money when the market goes down, and you can make money on the market when it goes sideways. The only market that you can do it in. All right. You can make money short term, long term, and medium term. And if you've taken any of my webinar weeks, you're going to learn how to position yourselves in the market. Now, what I've done is I made sure that it was affordable for everybody. I come in contact with everybody on an everyday basis. I come in contact with millionaires. I come in contact with people that are just starting, students that are in school. I've been there, done that. And I hate that most of us can't get educated unless we got thousands of dollars, right? Everybody's not dealt the same deck of cards, right? And I understand that. And my goal, because I know that I'm a unicorn, is I want everybody to understand and see the market like I do, so that you can be excited when the market falls and you can get excited when the market goes up. And I just don't see it that often. And it's because we're learning the wrong thing from the wrong people. All right. And one of the things that I try to teach a lot of people in 2022 is you can't get your feelings hurt anymore. All right. If you, I understand that this is the type of industry that we live in. This is the type of world we live in where you can't name call. But what a lot of people are not doing is they're not keeping it real with themselves, right? You can't get to that next level until you're able to look yourself in the mirror and say to yourself, why am I not where I'm at? My goal as a coach is to let you overcome that fear. Say that it's okay. You know what? It's okay to fail. It's okay to not understand. It's okay to not be in that space that we want to be in. All right. But at the same time, anybody that you're learning from, you guys gotta come correct with the people that are guiding you as well. I don't care if it's your mama and your daddy. If your mama and your daddy is trying to tell you how to invest in something, you need to ask your mommy and daddy, have they ever done it before? Mom, I know you're trying to tell me how to flip real estate, but how many houses have you bought in your lifetime? If the answer is one, you need to fire your mom. All right. Daddy, I know you telling me not to buy crypto and buy all of these different stocks, but how many stocks have you bought? If the answer is none, you need to fire your daddy. And I get it, guys. We want to learn from the people that are older than us. We want to learn from the people around us that have brought us up. But we're in a different world and we're in a different space. And if you want to be a pioneer, you got to start listening to other people that share the same ideas that you have, but have been successful in it. That's the problem that we have. We keep learning from the same people. Like, why am I going to learn how to invest in the stock market from my buddy who ain't invested in the stock market because he's smart, right? It's not about being smart. It's about experience. It's about knowing the path, the path to take to get to those particular riches, right? So you guys got to start asking those questions. And if those people that are trying to teach you are not willing to share their experiences, then that's probably the person that you probably shouldn't listen to. So, when I started to become successful in the stock market, it's when I started to listen to those that have paved the way. All right. It's not people that are trying to get there like me. Right. I had to stop listening to my friends because we were all trying to get there at the same time. I had to listen to people that have actually put in the work, put in the time, put in the education, and shown the receipts for it. That's the biggest piece because there's a lot of people out here that are smart, that are intelligent, but that does not mean that you know how to invest in the stock market. Now, I love my money managers that are out there. I love my financial planners that are out there. I have a financial planner, I have a wealth planner, right? Even though I understand real estate, I have a realtor, right? My wife, she's a psychiatrist. Guess what? She has a psychiatrist, right? Because just because you're a psychiatrist doesn't mean that you don't go through things and you need to sit down and talk to somebody as well. And that's something that we just don't understand. And that's something that we haven't been presented to us at a younger age. So I spend a lot of time talking about this, guys, because you're not going to get to $1 million if you don't get your mind right. You're just not going to, because a lot of us have been approaching the market in a frugal way. We don't understand it. We don't know why we're doing it. And my job is to make sure that when you approach the market, you ask yourself questions, right? I want you to come and I want you to take my classes, but my classes are not to anoint me as the best trader or investor or coach in the world. My job is to make sure that you understand exactly within 1 minute, why did you buy Apple today? Why did you buy Tesla today? Why did you buy Google last week? Why did you buy Snapchat this morning? What is your goal? How much do you plan to make? That's why you guys lose a lot of money and I don't. All right. Now, are my accounts down? Of course they're down, but they're goals. All right. And you guys got to understand how to lose if you want to learn how to win. And and unfortunately, what I'm doing right now is what a lot of people don't want to hear. They don't want to hear the negative side of the market. And then 5, 10, 15, 20 years goes by, and then you're trying to figure out why you're in the same place. All right. So before we even start, the quickest way to getting to $1 million, guys, is not saving $50,000 a year for 20 years. All right. It's not saving, you know, $10,000 a year for 100 years. All right. That's not the quickest way to getting to $1 million. The quickest way to getting to $1 million is this. All right, all right. So the quickest way to get into $1 million is flipping $1,000 10 times. All right. You take $1,000, you invest in something, it doubles in value. That's the fastest way to getting there. Now, that doesn't mean that I want you to go out there and take your 401k and IRA and say, Joel says go hard or go home. No, I want you to continue doing what you're doing, even if it's the incorrect way. And then I want you to open up other accounts and try to do it my way. I want you guys to do everything at the same time. All right. And again, if you've taken webinar week, I'm showing you guys how to approach the market where it doesn't have to be so scary. You can dip your toes in. You can say to yourself, what's comfortable with me? And whatever your personality is, that's how you should approach the market. I don't want you to trade the market like me. But I need to teach you guys the fundamentals of the market. So we're going to talk about a lot of stuff today when I show the videos. And if you can't follow along, then you need to get educated. And I'm not even trying to be funny. It's just that I've broken down the stock market in its most simplistic way. So if you can't get my videos, that's probably why you're losing in the market, because I'm going to say it, fifth graders can follow along with my videos after 1 hour of education. All right. So my job is to try to teach it to you. Again, I want you guys to join webinar week in 2 weeks. I do it once a month, and I do it once a month because it takes a lot of energy out of me, because I go for 10 hours straight and I just dump on you guys all the gems that I've learned in the market. All right, all the fundamental basics that you need so that you can have the right mindset and you know exactly how to approach the market. You're going to go through the what would Joe do system, which is asking yourself a question before you even push that buy button. What am I buying? What, when, where, why, how? What, when, where, why, how? I know I'm going back to the basics like we did back in grade school. If you can't answer what, who, what, when, where, why, and how, there's no reason why you should buy that stock. And that's going to protect a lot of you guys' bank accounts, because most of you guys can't get past who, what, and when. Most of you guys can't get past who. Who's trading this account? Who's buying? Right? So, once you're able to go through that particular system, you're going to be all right. All right. So I think we have enough people that are on in the comment section. All right. This is the new technology that we've been using in the room so that we can be interactive with you. Any question or concern that you have in the market, I'm going to be able to pull up those questions and I'm going to answer every single solitary question up until about 2 o'clock, because I got to leave right around 2 o'clock. I'm going to try to answer as many questions as I can. And I'm going to try to look at as many stocks as I possibly can. If you want me to look at your stock as an investment or as a trade or as a intraday trade, I also want you to put that in the comment section as well. All right, so let me pull up the comments. Excuse me. And if you go to StreamYard, I believe there's like a button. If you click the StreamYard button and add your name, then your face will come up with your comments. Some of you guys like to be anonymous, and I get it. But if you want your face to be seen, go to the StreamYard tab and then fill out the information. So my brother is on. What's up, brother? What I love about the market is that it's each one teach one. You should be teaching your family. Everybody that's on this call, if you know somebody on Facebook, there's no reason why you shouldn't have shared my video to your friends and family. Quit keeping all the information to yourself. Believe me, if those family members start to make money, even though I'm teaching them, it's going to come back to you guys tenfold. I'm all about good energy this year. All right. So spread the knowledge, spread the knowledge. So it looks like we want to look at what's going on, Denise. We're going to look at Ford. Ford was very, very popular in the last year. It was my number one stock for last year, and it paid off. All right, I made a lot of people money on Ford, and I'm no longer in Ford. Why? Because I've been pushing Ford for 18 months. For 18 months, I've been pushing Ford, and everybody's been telling me and Demetrius that we were idiots. And all that 18 months, we showed you guys the fortunes that we made. Then all of a sudden, right at the end, 18 months later, everybody in the room decide they want to buy Ford. That was my signal to get out. I'm like, hold up. If everybody's trying to get in now, most people know how to buy high and sell low. So I ended up selling all of my Ford. So that's probably why the stock has fallen. All right. When I start giving you guys stock tips or something that I'm buying, you need to take note because I'm trying to get in at the lows so that I can sell them at the highs. All right. So we'll look at Ford. Someone asked, hey, can you do Ford ticker, please? You see, Ford is very, very common. 1 minute is up, then it's down. Of course, 1 minute is up and 1 minute is down. It ran straight up, guys. It ran from $7 all the way to $25. What were you expecting to happen? The company tripled in market cap. All right, we're going to look at Snapchat. Snapchat saved my account. I've been losing this whole year in my long-term accounts. So let's just be straight, guys. When I say I'll be losing my long-term stuff, but I don't care because I got a 10-year plan on it. Right. So when it's down, I went in and I bought more. I'm happy when the market is down because I can short it or buy puts and make money to the downside. You guys saw my huge trade on that Nvidia short. And I love Nvidia, right? I got Nvidia long term, but I was also shorting it short term. If you understand how to approach the market with three different brains, you're going to be able to capitalize on it. You can be a bull and a bear at the same time on the same stock. All right. Marco said, happy Friday. Happy Friday. I hope everybody's doing well. I heard that we're having snowstorms across the nation in some areas. So be safe out there. Watch my videos if you snowed in. If you have an Oculus device, guys, for real. If you have an Oculus device, watch my videos through the Oculus device. It's crazy. It's crazy. It's like on a big screen. I watch myself after I do these particular videos because they're so nice. All right. Oh, you sure have been pushing it. Yeah, I was pushing forward, but I'm not pushing forward anymore. You guys are about to see me jump right back on the Tesla train. All right. I'm done with Ford. I'm thinking about General Motors. I'm loving what General Motors is doing right now. I actually like Ford too. If Ford drops a little bit more, I might get right back in Ford, but I'm all about Tesla. Now, why is that? We're going to talk about the fundamentals of the market and how you guys can get those doubles so that you can get to that millionaire status that everybody, aspire, everybody is pushing for. Somebody said, I see you got the hater block shades on that Burberry. Go ahead, Don Dada. Yeah, I got the. So, all right, it's 2022. All right. I know you guys know me for my Adidas tracksuits. Like everybody know that's my brand, right? It's in my videos, it's in my cartoons. I'm all about Adidas. I'm all about athleisure wear. So I said, you know what, in 2022, I used to, guys, this is I used to be an urban model. So I used to be all up in fashion, right? The urban side of it, right? So, I felt like, I'm gonna bring a little bit of fashion back. We don't talk about retail stocks enough. So I'm gonna pull up, like, did you guys know that Burberry actually has a stock? We'll pull up the Burberry stock. We haven't really been talking about retail, so I'm gonna pull up some retail stocks. we haven't really been talking about oil stocks. So I'll pull up, some oil stocks. I'm going to try to be a little bit more diversified and not just be one type of individual, because that's not what the market represents. The stock market represents everything and everybody, right? So I want to try to bring everything in. So I'm going to switch it up every now and then. So look for my fashion on these videos. Now, y'all ain't never going to see me in no suit. I'm anti-suit, right? But I'm gonna try to switch it up. So yeah, I got the Burberry hat on, chilling. All right. Marco said, even in Finland, there's a snowstorm. Guys, we have people from all over, and Marco's been chiming in. Some of his Finland friends have been chiming in. We have people from all over just trying to learn the stock market, because believe it or not, guys, America stock market is a place where, like, if you're not making money anywhere else in the world, the United States stock market, which is global and it allows everybody to invest in it, even through the futures market, it's just a great place to be in. So I find myself, educating a lot of people from all over. All right, we got Noble in the house. Noble says, not the stylish hat though, cuzzo. Love that you having fun with it. Yeah, so Noble's gonna come with the suits. All right, I'm just letting y'all know. I ain't trying to put him out there. I'm not saying he's coming with suits. I'm just saying that if there's somebody that's gonna rock the suits, he'll rock it. I think he had one video where he was rocking he was rocking the black joint with the black shades, and he was killing it. And so we're gonna try to switch it up for you guys this year. We all, you guys pretty much know who we are. His Limitless brand, my What Would Joel Do brand. But we're gonna try to switch it up for you guys and be a little bit more open, to what the market has to offer. Marlena said, which oil and gas stocks are the best to invest in, and which ONG stocks for trading? All right. So before I even start talking about these stocks, let me make sure. Hold up. Let me make sure I put out this. All right. Anything that we talk about today are the opinions, of Joel Harrison. Anything that we talk about today are the opinions. My job is so that you guys can do this on your own. Please do not inbox me. You want me to manage your money? I know I'm smart. I ain't managing your money. All right. Now, if it's like 100 million or $1 billion, I might think about it. All right. But I'm not gonna invest your $1,000. And it's not because I think your money is not good to me. It's just that I'm not in that space, right? I can't do what I'm doing if I'm managing your funds, right? If somebody is gonna manage your funds, make sure that they have a Series 6, Series 7's license. There's a lot of money managers, wealth managers in the room, like Brian, or my financial planner, Casey Gardner. All right, you can hit those guys up, and they will manage your money for you. But my job is different. Their job is to manage your funds and to make sure that you guys have that foundation in place that you need. My job is to teach you how to do stuff on your own. But they are the opinions of Joel. I'm gonna be wrong about stuff all the time. So make sure you do your due diligence. I'm wrong all the time. All right, on like information. I'm not wrong on like the stock market stuff, but I might say 97% and it's 95%, right? So do your due diligence. But I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 10 years, over 25,000 hours of trading experience. And again, everything that we talk about today are the opinions of Joel Harrison. We are going to talk about that Google split and how we're going to approach it long term. All right. Denise is giving us the hands up. All right. So, any stocks that you guys want, start typing those stocks now while we get through this presentation. All right. So, investing and trading is easy. I know y'all hate seeing this. Investing and trading is easy. Hold on. Investing and trading is easy. Investing and trading is easy. Investing and trading is easy. You make it hard. And when I say you, I mean you. You make it hard. Joel's approach to the market is so simple. I pretty much, that's why I call my other room ninja trading. I even had a robot. I've tried everything, right? I had a robot called Ninja Boticus. That joker was named Ninja Boticus. And I created an alter ego for myself because I wanted to approach the market like a robot. That was my whole job so that I can create a system, go through the what would Joel do method, who, what, when, where, why, how, so that when I see a certain situation, I know how to approach it without any emotions. All right. I leave my emotions to my trading, right? You can be as emotional as you want to when you're trading. As an investor, because you have time, you shouldn't really be emotional about your 5 year and your 10-year plays. All right. And if you've taken a webinar week, you're going to understand exactly why. But let's talk about this. Let's talk about this. Let me make myself a little smaller. All right. Not that small, though. All right, so let's talk about the Millionaire Challenge, right? Let's talk about the Millionaire Challenge before we start. What is this? People always ask me, Joel, is this a challenge? Is this something, is this a contest? Like, are you gonna give somebody $1 million if they get there? No, no. The Millionaire Challenge is a challenge for yourself psychologically. Psychologically, you need to get to $1 million, right? Because that's the first, that's the first place that you want to get to. In the corporate or the working world, the first step is always six figures, right? Once you hit $100,000, the next step is going to be, okay, maybe I can hit $200,000 or a half a million, and then the next step is a million. But it's interesting, once you hit that $1 million mark, the next mark is like 10 million. All right. So anything less than $1 million, guys, we all live the same way. And I want you to think about this. Think about this. All right. And I've been struggling saying this. Like, you see how I had to get in the chair and I fidget a little bit because it's hard. As much as you guys think I have ego and I got the Burberry hat and the shades on, I really don't like calling myself a millionaire, right? But I am. All right. Because you know why I feel uncomfortable when I say it? Because I know that the way that I live, if you came to my house and you saw how we lived and saw how my kids dressed, like, this is a true story. My kid is on the tennis team. And do you guys know that the parents on the tennis team actually was about to do a GoFundMe for my kid because they thought that he didn't have enough clothes, to he didn't have the proper attire to play tennis. Now, mind you, his parents are freaking millionaires, right? And the parents at the school had no idea that, it's just a different mindset, right? My kids are not fashion conscious because they don't care about fashion, right? And we raised them that way, right? And I think that that's a good thing, so that when they go out, we want them to look their best when they go out. I didn't expect him to look homeless, but you guys got to start getting your mind right. But the reason why I'm saying this is that up to $1 million, everybody lives the same way. You really can't tell the difference between, a millionaire and somebody that makes, you know, 20 or $30,000 a year. The only difference is that you might have some things that are a little nicer, right? Your house might, you might own a home. It might be three, four, $500,000, right? You might drive a better car, right? Instead of, driving regular cars, you might drive a luxury car, when you go to restaurants. So you usually just have that extra little oomph that you do. But the lifestyles are really, really similar. And that's why a lot of people, they don't really push to like 10 million, because they're like, I have millionaire friends, and we're all humble and we all live the same way. It's just that, do you want a little bit nicer things? Do you want to be able to go to the grocery store and not really worry about the price of anything, right? Drive any type of car you want to. Some people are like, nah, I actually like being frugal, and I like, it makes me feel better knowing that I have the best price thing. And there's nothing wrong with being that. But that type of mindset you can't bring into the stock market if you're trying to hit a million or 10 million or 20 million. And I keep explaining that to a lot of my friends, right? If you have that frugal mind, that's probably why you can't get to that next level, because you don't have anything to push you to get there. There's no goals, right? Because you're like, I live like I'm living and I'm fine and I'm healthy, and especially a lot of my single friends, they're like, I still can date. I can get any person that I want to. Like, why do I need to push to be, this $1 million or this 10 million or this 20 million? So you got to ask yourself, you got to have goals. That's why I do a lot of challenges, because even where we're at right now, I need to continually push myself. I got to push myself to certain levels. Like I literally have to say, you know what? I want to run the Peachtree Road race in July. So in order for me to run that Peachtree Road race, I need to start getting in shape right now. Or I got a vacation to set in February or March. So if I want to have that beach body, I need to start working out right now. Well, a lot of you guys need to set a goal and say, you know what, I might be a little bit content right now. And I want you to look in the mirror and ask yourself, you know, are you in that? Are you in the same? Are you in the place that you thought that you were going to be in at this particular time in your life? If the answer is no, then you need to look in the mirror and say, how do I get to that next level? Well, it starts with setting a goal for yourself, right? And you can't go off of how everybody around you is living. You got to push a little bit further than that. You got to get a little bit uncomfortable. It doesn't mean that you have to change the way that you do things. Your foundation is there so that you can continue living the way that you're living. But then you got to ask yourself, why? Joel, okay, why should I push myself to a million to 10 million? And that's where the light bulb goes off, because a lot of you guys don't realize that inflation is taking place. The cost of everything is going up in value. So even if you're content right now, if you're not invested in the stock market, you're not keeping up with the Joneses. And if you're not buying the market, consistently, you're going to get left behind in the next 10 years. And the value of your dollar that you're comfortable with now is only going to be worth maybe a tenth of what you can get. So if you continue doing what you're doing right now, it's actually like you're going in reverse. And most of us don't realize that. Okay. So you got to start setting goals that are over and beyond so that you can keep up with the lifestyle that you're living right now. All right. So I was researching the other day, and it says that if to be considered rich, you have to have at least, it said $1.5 million. So I just said, you know what, a million, right? So to be rich, you gotta have if you added up all your assets, your house, any money that you have, your stock portfolio, that's gonna take you to about $1 million. That's how the average person around you is living, right? So if you want to go over and beyond to be wealthy, you actually have to have $10 million, right? Now, this is what's interesting, guys. Do y'all know that 20 years ago, the 20 years ago, it was totally different. It was $1 million to be wealthy. And it was like two or $300,000 to actually be rich. And now the numbers have gone up almost tenfold. So guess what? Probably in 20 years, guys, $1 million is what you need just to be comfortable. And just by me saying that, a lot of you guys got stressed out. You got stressed out. Joe, God dang, you telling me I gotta have $1 million? I don't have no money. I don't have a pot to piss in. You gotta start small. You got to start investing in the market, and you got to learn how to approach the market. You got to talk to different people. You just got to go over and beyond. You got to cut out those people that are at the same level or below you financially, because they don't have that financial understanding yet or have gone through the process, and start listening to either experts in those particular fields or your friends and family members, even the ones that you hate, even your Uncle Ed that's cocky. Everybody's got an Uncle Ed, right? That's got all the money in the world, but you just don't want to go to that individual and learn from, because they too cocky, right? But they got a lot of gems that they can get you, and they know a lot of different ways that you can go about, creating that particular wealth the correct way, because Uncle Ed probably went through all the issues that you don't want to go through. But you guys got to start listening to the people that have paved the way, and cut out those individuals that think they know what to do, because all they're doing is sending you in a vicious circle. And that's why I have consultations all the freaking time. You guys would be surprised how many consultations I've done because of the other 9 or 10 educators that these people have gone to. And I don't really, y'all realize when I do consults, I don't I don't say I don't like to I don't like anyone to feel like they're beneath me or I'm above them, right? I don't want to call you guys students. I don't want to call you guys um I call you guys insiders, but I don't like we're all equal because I can learn from you just as much as you can learn from me, right? It's just that I know where my area of expertise is. And then when I don't have if I'm not smart in those particular areas, I close my mouth and I listen. All right. And that's how you guys are going to get to the next level. You guys got to learn when to be quiet and know that you're not an expert in an area, and then take in the information from those that have, because everybody that's on this call right now is an expert in something. Everyone. Even my kids right now at 16 and 17 years old, they're experts in certain areas. And I actually go to them, and if I want to learn about, I don't know, something in the gaming field, or what's going on athletically, even as their parent, I sit back and I listen. Even investment wise, I listen to my kids on what the next best thing is, where everything is moving to, because they're letting me know what their peer group is into. Because more than likely in 15 or 20 years, those are going to be the stocks that are on top. Why do TikTok's been around for what, 3, 4, 5 years? Your kids could have put you onto TikTok and know where everything was going, right? If you have a business, you should have been on TikTok 3 years ago when everybody's kids was talking about it. But what is it? We didn't want to go on it because it was this children thing. And now some of the biggest businesses are being run on TikTok right now. And you just thought that it was this kiddie thing, right? We thought that Instagram was this kiddie thing. Instagram has all the major businesses on there running. All right. So you guys got to put your ego to the side if you're trying to build that business, if you're trying to get to that millionaire status. All right. I know I spent a lot of time getting our minds right, but you got to ask yourself, do you want to be stable or do you want to be rich? Do you want to be stable or do you want to be rich? Do you want to be stable or do you want to be rich? Because a lot of you guys approach the market thinking that you want to be rich, but you invest to be stable. And if you keep investing to be stable, that's great. Just know that that's what you're doing. I do a lot of consultations and I hear people talk to me about how they're investing. And then I always ask the one simple question: what is your goal? Because what you're doing does not match your goal, because we have numbers now. We literally can plug in numbers and kind of see where you could go. You have this amount of money and you want it to be this amount in this amount of time, and you're invested in that. It's not going to happen. And then, you get angry and mad because of the reality of it. But you guys got to you guys got to look yourselves in the mirror and literally say to yourself, what is the goal? Am I investing to be rich or am I investing to be stable? Because if I'm investing to be stable, I got to understand that. And I also got to understand that if I retire right now, I either I'm going to continue to work for the rest of my life, right? Or B, you're really going to have to do a super downsize. Like some of us think, oh, I have $1 million. I'll just live off of 10% of that. Nah, if you got $1 million, you got to live off of maybe 1% of it, because you didn't factor in inflation. And that's the one key that none of us have done. We don't factor in inflation. We keep thinking that the cost of everything now is the same price tomorrow, and it's not. It's not. My parents' first home that they ever bought was $50,000. They never in their lifetimes believed that it would be worth $400,000 one day, 8 times its value. If you would have told them then that it was going to be worth 400,000, they would have fainted. Fast forward 40 years, you know? And now they're like, this ain't nothing. I thought that I was going to be able to retire off of this house and I still got to work, right? We don't want to be there. 50,000 to 400 was huge in the way that they thought about it. My mother's first, the first, when I went to my first car dealership with my parents, I remember they bought a car, a 200 SX. We couldn't afford the Honda Accord. That's why I always talk about Honda Accords. I remember the Honda Accord was too expensive. It was $10,000. I remember it. And my mother was like, oh, we just can't afford it. We got to go get this 200 SX that was like 8,500, $9,000 brand new. You tell me some place that you can go and buy a brand new car for $8,500. And it was a nice car. Honda Accord, now 5, 20, 30 years later, 5 times that amount. All right. So you guys got to start thinking, forward, thinking that everything's going to cost 10 times the value that they are right now. So you can't invest the way that you want to, but you got to understand, all right, if I'm going to invest this way, where can it actually go? So let's talk about it real quick. All right. Before we get to your stocks, because this is very important. You guys came to the Millionaire Challenge for a reason. You wanted a millionaire to teach you how to look at the market. In order to get to those millions, you got to understand numbers first. You got to understand numbers, and you got to understand what those numbers can do. Because once your numbers start to increase, once you get from 5 figures to 6 figures to 7 figures, the numbers change. I remember when I first started trading, I would, if I lost $20,000 in one day, I was jumping off a bridge. Fast forward, 10 years later, I lose $20,000. I'm joking in the room. It's a different mindset because it's just a different amount of money that I'm playing with. So let's look at the S&P 500, because the S&P 500 is something that everybody looks at. And I'm going to take my picture off so that you guys can see the full screen. And I'm going to take, hold on. I'm going to take this off for a second. All right. So let's look at the S&P 500. If you had $100,000 back in 2011, 2010, now I was trading back then. All right, that was 12 years ago. If for some odd reason you had 100 grand, that 100 grand, will be worth somewhere around $470,000 today. So think about that. Even if you had invested in what most money managers are investing in right now, and you had $100,000, and I didn't include the dividends, all right, it took 4.5 years for that money to double. Even if I had $100,000 check, I invested it in the market in the most safest option. And this is investing to be safe. Y'all hear what I just said? This is investing to be safe. Even with and some of you guys ain't playing with $100,000. If you had $100,000 12 years ago, it won't even be worth $1 million today. And that's with $100,000. Nothing wrong with that. Your financial planner is probably going to encourage you to invest this particular way. All right. And I understand it, because even in the ups and downs, watch this. In 2010, if you had $100,000, psychologically, I want you guys to think about this. Your $100,000 in 1 year was worth 137. Then a year later, guys, that $137,000 went all the way back to $100,000. Well, roughly 107. So it dropped about 30%. And we're talking about the S&P 500. Then after that happened, after you dropped 30%, it then took 4 years for that $100,000 to double. So congratulations, you got your first 100% return, but it took 4.5 years. Then that $200,000 dropped in value to 180. That 180, and I think that's a lot of money. That's a $30,000 drop. Then that 180 ran to 290. Now imagine having $300,000 and then all of a sudden it's worth 233. Then it went from 233, which was almost the same price that it was back in 2015, 4 years prior. Can you psychologically imagine that? I had to do this, right? When I'm looking at my accounts, I'm actually going through the same thing. If you guys seen my accounts, this is literally psychologically what I was going through, right? Then that 290 dropped to 230. You're really feeling like crap because you literally didn't make no money For 4 years, you're really thinking like, is this for me? Like, what's going on with me? Why am I'm going with the safest option and my accounts are just not growing. Then all of a sudden it goes from 230 to 330 and then COVID happens. And when COVID happened, guys, watch this. That $339,000, because you're seeing that $1,000,000, you're like, oh, I almost got the 500. Then all of a sudden that 339 went to 218. Can you imagine losing $120,000? Most of you guys would have sold your portfolio. You would have fired your money manager and you would have said, I'm done. I'm not going to be a millionaire. This is crazy, because during this whole time, you're thinking about, I'm going to lose everything. Oh my God. And then what ended up happening? Your fear stopped you from getting another double, 218 to 470. And now we're sitting at 422. Now, here's what's interesting. Most of you guys have already sold your whole portfolio on this 18% drop. This was a 30% drop from the start. From the jump, you went up to 100 to 130 and then immediately lost all your money. Well, you felt like you lost all your money. How many of you would have psychologically been able to keep your foot on the gas and get this move? I would say 99% of you wouldn't, unless you had a money manager managing your money that you couldn't touch. That's why everybody who has a 401k did well. Because if you didn't have a 401k, I promise you, if you didn't have a 401k and you had access to this money, you would not have made 4 times your money, period. And a lot of you guys thought that you would. Then I'm going to take your traders. Your traders is trading the market. Why didn't they make 100,000? I know a lot of traders that was trading with $100,000 back then, and they were good traders, making $1,000 a day, $2,000 a day. Why didn't those traders have $500,000 10 years later? I'm gonna tell you why. Because traders think that they're being aggressive. And do y'all know that traders are actually even more scared than the 401k holders? Because the traders are in cash most of the time. They're protecting their money. I'm getting in. I think I'm in these volatile products, and then I'm out. I'm scared. So they're scared for 10 years. So what they did over the last 10 years was they reinforced their scaredness. They didn't do nothing but get worse over every year. And then they got sour grapes too. As a trader, if you watch the market go up and you didn't make any money on it, and you were already scared in the first place, what's going to make you trade again? You're thinking, well, 10 years went by. Why would I make money in the next 10 years? Well, you just reinforced your brain into a conservative, frugal, I don't want to put anything in the market or lose anything to make any money. A lot of you guys fit in this category, which is going to keep me in business forever. But it was your traders who couldn't touch their money because they hired a money manager to manage their money. That's why they have money today. Okay. So psychologically, there's a lot of stuff that we got to go through to get to this million. If you're going to do it on your own, you got to be able to not touch that money. And when the market goes down 30%, you got to have the faith that it's going to keep going higher. And then when it drops 20%, it's going to go higher. And when it drops 20%, it's going to go higher. And when it drops 30%, it's going to go higher. If not, then, this millionaire challenge is not for you. But I'm trying to tell you guys what you're struggling with. And it's the same thing that everybody struggles with. You got to hire somebody that can manage your foundation, especially if you're scared. B, you guys got to be a little bit more aggressive, because even with $100,000, y'all know it's still going to take about 20 years. Like, this took 10 years. It took 12 years for my money to go from 100 to 500. So if it took 10 years for it to get to $500,000, I guess you can get there faster, because this did grow 5 times its value. So yeah, from 500 to $1 million might be in the next 2 or 3 years. All right. But That's starting with 100 grand. Most of y'all ain't got 100 grand yet. Some of y'all got 1,000 investing in the S&P 500, expecting to be millionaires in 10 years. And I'm like, guys, it's just numbers. You needed 100 grand, and we still ain't got there yet. And I see you guys just so comfortable, like, oh yeah, I put in $50 away every 2 weeks in the S&P. I'm gonna be a millionaire. Yeah, in 150 years. And I don't want to be the bearer of bad news. It's just that your goal and what you're starting with don't match. The A plus B, it can equal C, but your C is off because you haven't looked in the mirror, you haven't taken out a calculator or talked to the right person that's been through this and was like, oh, okay, I got to get a little bit more aggressive. I'm gonna show you guys another thing, right? Even if you had $1,500, right? And why did I get this number? This number now, shout outs to Noble. Noble brought this calculator to the room. I knew nothing about it. He brought it into the room, and it really, really helped a lot of you individuals that are out there. All right. It's the don'tquityourdayjob.com calculator. It's called the don'tquityourdayjob.com calculator. You traders that are out there, what you don't realize that you've done is you became a trader, but what you did was you made investing harder for yourself. Because when you became a trader, you didn't realize that you just pretty much switched out your 9 to 5 for another 9 to 5. And if you have a regular 9 to 5, everybody that's an engineer, lawyer, doctor, if you're not putting money away, everybody knows that if you're not buying real estate, if you're not putting money away, you're going to be working as a doctor, lawyer, or engineer for the rest of your life. It's just like if you guys ever played cash flow, you're going to understand that. All right. So if you're a day trader trading and you're not putting money away, especially in a 401k or an IRA, you just made your life worse. When you come to me, I try to explain that to people. You don't want to quit your job and do what I'm doing unless you got some foundation in place, or you got a significant other or somebody in your family where you can have the support to be able to do your thing, right? Through and be able to get through the ups and downs and put money away for yourself. All right, I'm going to get to you guys as stocks. I promise you, I am. I am. I'm going to get to every single stock. But you guys got to psychologically understand how to get there. So I picked this number, and I show this slide during all of my webinar, which is because the 401k 401ks, most people that are out there working, even if you make $400,000 a year, the maximum amount of money that you can put into the stock market is $19,000. So if you divide 19,000 by 12, you're going to get the number somewhere around 1583. So even if you had put that whole amount of money, this is how your mutual fund or financial planner is investing your money. They're investing it this safe, right? And this is because this is the S&P 500. So even if you had put 1583 into your account every month, and most of you guys don't have $1,583, you would have hit $1,000,000, but it would have taken you 16 years. We're on pace. It looks the same way, right? Even though this was 16 years from 2008 to 2020, right? Even when we looked at the slide before and you started out with 100 and we sitting at 400 now, it's on the same pace. It's going to take you about 16 years. 10 years already went by, maybe another 5 or 6 years, a $500,000 account will get to $1,000,000. But now I have numbers that I can actually see on a market that's been going up, right? Pulling up a chart and looking at numbers, right? So I always tell people you should be a little bit more aggressive. But even when you're aggressive, you guys got to psychologically, before you get there, you got to understand the path before you get there. So that when you get there, Joel said this. I remember listening to this dude years ago, and he said this was going to happen. When those numbers start to grow, it's going to be scary, mad scary. But you got to hold on. Right? So check this out. Let's say you took $100,000 and you had invested in Amazon. I didn't know it, guys. Even me, I wasn't really about Amazon until about 2011. This is when I started thinking about getting into Amazon, right? Right when it was around $300 a share. True story. I went to my friend Enrique Matabar. Enrique Matabar is successful. He's one of my great friends. He owns 2 dental practices in DC, doing well for himself, right? He came to me. He was like, "Hey man, I got $2,500. I don't mean to put his business out there." He was like, "Should I invest in Amazon?" And I was like, "Heck yeah." And he was like, "I don't know. I can only get about 7 or 8 shares." I was like, "Buy it." I'm looking at the charts. It looks like it's a high growth company. I think you're gonna be all right. So he didn't invest, right? Because think about it. Back then, even with me, why would he listen to me? Even back in 2011, I only had been investing. I wasn't a million. I had been a millionaire in real estate, but I hadn't been a millionaire in the stock market. So why should he listen to me? Right. And I got to start thinking about the people that I talked to years ago. Like I told you what to do, but why should they listen to me? They really should be listening to me now. But back then, I didn't have the credentials, I didn't have the experience, I didn't have the receipts to be able to convince a lot of the friends and family that were around me that this was the thing to do. Now I do. So if any of my friends and family are not listening to me now, then they're just idiots, right? Because I have the knowledge, I have the experience, I have the time, I have the classes, right? And you're just going to have friends and family that are like that. But anyway, let's go back to 2009. So he didn't invest. And sure enough, if he had invested that $2,500, right, it would be worth enough money to probably pay off his house. All right. So it went from what, $300 all the way to $3,700. That means you would have made 10 times your money, 3 times over. So nah, he wouldn't have been able to pay off his house, but he would have had a nice little amount of money if he had invested that 2,500 bucks. All right. But let's talk about it. Let's say you had 100 grand. All right. For you guys that have 100 grand. And a lot of people, a lot of my peer group, because I went to college in the 90s. All right. I went to college in the 90s. I'm showing my age. My friends have been working for 20, 30 years. If you've been, well, do the math. If you've been working 20 years and you've been putting $10,000 away and you ain't got 100 or $200,000 in your accounts, then you've been playing. That's right. I said it. Anybody that's on here right now that went to school with me that don't have 100 or a $200,000 account, you've been playing. But you can get back there, right? Remember, I got everything back in 10 years. I lost everything in 2008, 2009 real estate market crash, got everything back plus more. All right. So you can get there and you can get there fast, but you can't get there going this particular route with no money. Yeah, you'll protect your money. And yes, I want you guys to go this route in the beginning to form your foundation. Yes. But if you're trying to get to $1 million to $10 million, this ain't the way to do it. This is how you form your foundation, your foundation, your foundation, your foundation, your foundation to be safe, to know that you can eat, to know in the future I can sell this and maybe it'll pay off my house. But am I going to be able to retire? Probably not. So you got to do it on your own. So watch this. If you had $100,000, that $100,000 quickly went to $400,000. Now remember, it took 4 years here. It took what, 10 years in the S&P. But then check this out. It went from 400,000, and we're talking about Amazon. Why did I pull up these popular stocks? Because I want you guys to even understand it, even with popular stocks. Remember PayPal that just did it, right? These stocks, this is what they go through on their trek to making you a lot of money. They're going to pull back hard. Your $100,000 would have gone to 400. Your $400,000 would have dropped to 284. Can you imagine having 400 grand and then telling your friends what, a year later that it's now worth 284? Can you imagine after the recession having a $405,000 house? And while you see everybody's houses going up, your $405,000 house drops to 284. You're going to feel like a failure. You just are. You just are psychologically, right? You got to get over it. You got to understand that if I have a 10-year plan in place, I got to stick with it. And if I want to be emotional about stocks, I can short and make money when things are dropping in my trading accounts to protect myself for when this happens. Do you guys know where the word hedge fund came from? Hedge fund came from hedging your bets. A hedge is when you know that you're going to lose, you can protect yourself, you can hedge yourself. That's what hedge funds do. When the market is going up and they think that it's going down and they have stocks that they might be getting dividends on, they can short the market where other mutual funds might not be able to do it. They can hedge their positions and make money to the downside while their stocks, fall in price. So that means if they lose 100,000 over here and make 100,000 over there, it wipes itself out. And then when the market goes back up, they'll still continue to make money to the upside. They hedge themselves. If you guys had trading accounts or short-term, medium-term accounts on the side, you would hedge your positions when this thing drops from 405 to 284. Because if you were able to do it and you was able to withstand this pain, you got rewarded. And what you guys try to do is you guys try to come in here and buy the lows. Well, guess what, guys? The lows feel like it does now. And I don't see a lot of y'all buying. This is how the lows feel. And yes, can we go 10 or 15% lower? We can. But if for all of this time you've been telling yourself the market's about to go down, it's about to go down, I can't make any money because I haven't in the last 10 years, more than likely you ain't about to buy. Guys, I've been there, done that. I do consultations all the time. I know what you're going through. So let's talk about the numbers again. All right, it's 1 o'clock. 405 to 284. Then we ran from 284 to 696. You lost almost a third. Wait, you lost what? You lost 1/3 of your assets, and then it ran from 300 to 700. But then check this out. After it ran from 300 to 700, and you really thought you was about to hit this mill. When you get to about 700, you almost want to just come out and call yourself a millionaire. You get punched in the face, and then the market Amazon drops from 700 almost back to the price you started at 2 years prior. Guys, can you psychologically understand this? We're talking about two. Now, when you look at a chart, it looks simple. But can you imagine for 2 years the ups and downs of this? That's why you have to take your emotions out of it by having, like, guys, y'all know that trading accounts help you with your investing accounts, because if you have your investing accounts in place, you can be emotional over here in your trading accounts that are smaller. And you can let stuff like this drop from 696 to 474, and then it runs to a million. Then it runs to a million. Then the next year, guys, you're running to 2 million. Y'all see that? You see the pain that you had to endure to get to a million? Did you see the pain you had to endure just to get here? That's what stocks do. You can't get to that millionaire status until you're able to withstand that pain. That pain and understanding that the market is rigged to go up. And if you're invested in, if you hire, and I'm telling you guys, yes, I want you to hire a wealth planner. Your wealth planner is going to say, you don't have to worry about it, because if you invest this way, I'm going to make sure you're a millionaire in 15 years. Guys, that's when I started making more money, because once me and my wife were able to understand that we had areas that we knew we were going to get to at a certain amount of time, then this became easy, because we didn't have to worry about the millionaire status, thing anymore. And then guess what, guys? It happened faster than we thought it was going to happen. You know why? Because I wasn't just doing this and being safe. I was doing this and I was doing this at the same damn time. And yes, my money here was smaller, but I was getting to my numbers quicker while my foundation was still growing. This is what 99.999999999% of you are not doing, including you advanced traders and you advanced investors. I'm calling you out. You just aren't. That's why you can't get to where you want to get to. It's very simple math that you have to be able and willing to understand if you're trying to get to those levels. All right, we got one more I want you to look at. Apple. And let's talk about Amazon. Amazon made you 3,800% over 12 years. The S&P 500 guys was only up 400%. Now, that's a lot. That's a lot. But that ain't 3,800. And it's sure as heck not 1,800. And most of you guys knew to invest in Apple. Like Apple was on everybody's radar in 2012. I think that's what, right around the year 12, 14, when Steve Jobs, I think, was dying, right? I don't know the exact year. So Apple was on your radar to invest in. Let's say you had $100,000 there. Let's talk about the largest company on the planet. Psychologically, what did you have to go through before we get to you guys' stocks? What did you have to go through psychologically? Well, if you had $100,000 back in 2011, that $100,000 quickly doubled in 1 year to 250. But then guess what happened? We're talking about Apple, guys. This is after the recession. After the recession. Apple dropped from 250,000 to 130. You literally dropped 50%, well, 40%. Can you imagine owning something like Apple that you trust? Like this is like your go-to, your ride or die, and you lose 40%. Y'all know y'all tripping right now off of an 18% move on the NASDAQ. Y'all tripping off of an 18% move on the NASDAQ. And Apple dropped 40% here. This is what stocks do. But this is also what stocks do. A lot of people got out of Apple. A lot of my friends, a lot of people that are on this call right now there's someone on this call right now that became a millionaire just off of Apple. All right. I don't want to say his name. All right. Just investing in Apple right down here. And I remember when he was buying it and calling me like, Joel, I'm investing in it. Had his own businesses. I'm going to invest in this Apple. And sure enough, he was able to ride it out this whole time. I have so much respect for this individual because you don't meet too many people that can do this. And he had a 401k on the side and a real estate, but was doing this on his own. That 250 dropped to 130. Then that 130 in 2 years tripled, got to 330. Can you imagine having $336,000 and losing 100,000? Or 3 million. Think if you had 3 million in it and you lost 1 million. You would be wanting to jump off a bridge. But that's what stocks do. And this happened over a 2-year period. And then it ran from 220 to 580. Here's the killer right. This right here killed everybody. I'm going to tell you why. Because you're going through the psychological move. You go from 220 to 580 and you can smell that $1 million. And then it drops to 350. You not only dropped and killed your spirit, you went back to the prices from 2015. 4 years of money wiped away. Psychologically. That will kill you. Most people will get out. But if you're going to get out, where are you going to get back in? I see people do it all the time. They get out of stuff. They don't get back in. Where are you going to get back in at? Up here? If you were able to hold on, you got rewarded because when the market sells off like this, it bounces back quickly. It rewards those that were here. Because what you guys don't realize is, think about it, guys. The stock market goes up when all the money is dumped back in it. Think about that. This is the one thing y'all do not talk about. Think about it. If I have a if I have a if I have a bowl and I have a bowl, if I have a box of cereal and I poured that box of cereal in that bowl, right? It's gonna fill up. If I take the cereal out of it, then the bowl's gonna go down. The stock market reaches its highs, guys, when the mutual funds feel confident enough to put all of your money back in the market. So imagine if I print money. This is when the light bulb should just go completely off. If every time I put all the money in the market back in the market and it goes to here, and then I print more money, not only is it going to go back to its all-time highs, it's going to go higher because now more money has been printed. That's what inflation is. Our government is about to print $5 trillion. $5 trillion. That's 2 apples. And Apple provides a lot of liquidity and jobs in the market. Imagine the government printing 2 apples and putting that money into the market. That means 5 trillion can be sitting under your bed. That money's going to find its way into the market. And then when you finally take that money from under your bed and say, I need to make some money too, and you put it on top of the money that they've already printed, that's where inflation comes in. And that's when the market goes up. And y'all are so consumed with hearing how interest rates are going to make the market drop. You selling all of your stock. You doing the same wrong thing. And I get it. The market fell. I get it. If you were smart enough to take it out before the market went down, you're smart. But then you continue it because you just basically reinforced your negative view of the market by winning. But the market spends 80% of the time going up. Y'all know that? That's a real stat. The market has been spending 80% of its time going up, not down. When it goes down, it's fast and it's quick. Even sideways, it's not that long. It spends 80% of its. That's why you get this move from the bottom part of your screen to the up side, that 45-degree angle, because it's spending most of its time going up. But the market's going to zero. Let it go to zero. The government will print money and then bring it back. Like y'all don't see that that's what they do. If the market falls enough, they're going to print enough money to get the market back. And the more money they print, the more inflation is going to happen, the more stocks are going to go up. So quit getting caught up in all of this noise and just know when to invest robotically. When the market's falling short term, short. Buy puts, have fun. But don't get away from the goal, which is the millions that you're making from investing, that a lot of you guys are having a hard time doing. You're either investing too conservative, taking too long to get to your money, or you're being too aggressive and you're thinking that this is the aggressive way to go. But traders are the most conservative people on the planet because they ain't invested in nothing. They invest 10 or 15 minutes a day and then they're not invested no more. It's the worst investor on the planet. The worst investor on the planet is a trader. It's just real talk. That's why most traders, like real traders, they in the same place that they were 10, 15, 20, 30 years ago. Because all they did was substitute a job for another job. And if you don't invest in yourself, you gonna be in the same place 20, 30 years from now. It's just math. All right. So let's talk about Apple again. It went from 100, 250, 130, 330, 235, 80, 300. Then it went to 819. You got so close to getting to a mill. And then COVID came and said, no, you're not making a million. That's why so many people ended up becoming millionaires from here to here, including my family. Okay. We got real close here. COVID came and punched us in the face. And psychologically, it was tough. But then because we were able to reinvest, and I was able to invest, had liquid money that I could put in all these places, you capitalize on here, and then you were rewarded. because I wasn't just trading, I was investing. I had medium term accounts. And then that 500 went to 1 million, and then that 1 million went to 1.8. What do we just experience? A $300,000 loss if you had $1.8 million. You just lost $300,000. You remember how you felt when you used to lose 300 over here? It ain't the same up here. This 300 hit hard. This 300 is a laugh. And guys, that was only 2 years later. Imagine 2 years from now being able to lose $20,000 and you laugh every day. It's in your hands, guys, to create that millionaire challenge for yourself and to understand that $1 million ain't a lot of money. All right, it's not. To get there is going to take a little bit of work. All right, it's going to take a little bit of work. But you got to ask yourself again, do you want to be stable or do you want to be rich? Do you want to be stable or rich? There is a difference. And a lot of you guys have this frugal mind, this stable mind, and you can't get away from it. And you think that you're doing the right things to get to where you want to get to, but you're talking to the wrong people. B, you don't have somebody coaching and managing you so that you can get to where you want to get to. And you're not going through the process. And guys, you're not investing. You're not investing in the market, and you're not investing enough money. Right? You're still only throwing a little bit at it. I got friends worth a $500,000 and they got $2,000 accounts because they think that's just enough. Joe, I'll put 2,000 in. That's it. Well, what's that 2,000 in? Right? I bought the Kathy Wood joint. All right, well, what can it do? Let's go back and look at it. You guys got to be able to go backwards and see where it can go forward. Okay. But you guys worry so much about losing, you can't win. You worry so much about losing, you can't win. You worry so much about losing, you can't win. All I see is negativity right now. And you guys should be happy. You're not going to get times in the market, guys, where it drops 18 to 20%. I'm sorry, you're just not. You should be happy. It feels bad because you got to go through maybe losing 100 grand in an account that may have tripled in the past 2 or 3 years. You got to remember where you came from and then think about where it can go. But you worry so much about losing, you can't win. All right. You got to get over that 90%. There's a 90% chance that a stock eventually goes back to its high. So when we look at your stocks today, not only am I going to look at it where it is, I'm going to tell you the percent that it can go to. All right. Remember, when you lose 50 or 60% in a stock like a PayPal or a Square, when it goes back to its highs, it's not 60%. It's 150%. That's right, guys. The lower a stock goes, the cheaper it gets. And when it ever recovers, you're going to make even more money than when it failed. Okay? You guys got to understand that. Y'all saw how Amazon would drop and then it would grow 300 or 400%. You're never going to make a 400% return if you worried about a 50% loss. Things that drop 50% can go 400. Things, if you only want to buy a stock that can only drop 2%, then don't expect to make 400%. Stocks that drop 2% go up 4%. Stocks that drop 3%, they might go up 7 or 8%. So you got to be willing for that stock to go down if it's fundamentally good, if you're trying to make money to the upside. And you got to learn how to dollar cost average and buy it back. And you guys need to start putting away 10% of your income into yourself, because you actually need about 10 times your salary to retire. However much you made this year, multiply it times 10. That's the minimum you need to retire off of. Minimum. And that means not doing anything. You need 10 times. This is what your wealth planner is going to tell you. This is what everybody on TV is telling you. But because you still see 1 + 1 is equal to 2, it's hard for you to do it. 10 times. You need to start saying that to yourself 10 times. But if I find stocks that can grow 10 times their value, I can offset that. I can literally put away my salary this year in a high growth stock and know that's the amount of money I need, in the future. I put away 5,000 in Bitcoin, it turned into 50,000. I'm not saying I was making 5,000 a year, but that's just a scenario. If I had put 50,000 away just in Bitcoin, and I'm not telling everybody to run out there and buy crypto, it would have turned that 10 times within 1 year. You guys got to know what to look for. All right, I want you guys to use my method. What would Joel do method is a flag pattern. You guys can go do that on your own. I have a video that's out called the What Would Joel Do method. That's free. You can go to my YouTube page and find it. All right, webinar week is February 15th through 17th. All right, it's 10 hours of me talking like this, visual. You're going to get gems. All right, it's $95. Everybody can afford that. All right, it's a little bit more expensive than you might want to pay, but it's just enough for you to get your butt in. All right, get your friends and family that are in. All right, and it's just enough money for you guys that have money where you can get 5 or 6 or 7 of your cousins in, because $700 ain't a lot to you. Get they butts educated. That's why I made this price, so that as many people can get this education that they need. It's 10 hours, but it's a 30-day class, right? Because you have 30 days access to it. I'm going to teach you how to buy stocks, options, the trading side of it, and I'm going to teach you how to generate income daily by day trading, which is a skill that most of you guys don't have. All of us have a serviceable skill where we got to put on a suit and I got to sell you guys something. All right. But can you generate money? Can you make a dollar, make another dollar? 99% of y'all can't do it. All right. You should have that skill, because one day you might get fired. One day that job might just go away and you might need to make some money, and you got a little bit of money on the side. If you don't have the skill set to be able to go in there, I don't have to, I can just go in there and buy Apple and make some money off of it and live off of it. Then, you might be in a terrible situation. And I was in a terrible situation back in 2008 and 9, when not only did I lose all of my real estate, but all of my clients lost their jobs. So if my clients lose their jobs, I can't sell houses, and I can't flip houses unless there's other people that are going to be buying them flips. So it was a terrible situation for me, and I didn't know how to generate income. And I told myself I would never, ever in my life feel that way. As a man, as a husband, to feel like you can't contribute is one of the worst feelings in the world. I don't care how cool your significant other is, right? You want to be able to contribute. And if you don't know that skill set, it's going to be hard, especially if people aren't hiring, especially if you don't have especially if you're not in the healthcare field, or you have some of these jobs that can overcome, certain parts of the industries, or, when the economy does certain things, there's certain industries that are going to do well consistently. And real estate is one of those up and down industries that I didn't realize until I saw it come down. I was always told that real estate was the most secure place you can be in, until me and all of my friends lost everything. Doesn't mean that I hate real estate. It just means that I'm never going to put myself in that position again. Love real estate, own real estate. I approach it a different way. All right. If you haven't downloaded my app, go ahead and do it now. What Would Joe Do app is free. It's free. It's free. It's free. There is an alert service where you're going to be able to get alerts during the day. I only really send out alerts if I feel like you can make money that particular day. So when those alerts come, you want to look at it. You want to see those alerts. I also put out alerts for when I'm buying and selling in my investing portfolio. Also, if I see unusual options activity, I will set out alerts. You also have access to all of my videos, like every single video that I have available, even when they become new, you can find them there. All right. If you want your charts to look like mine, I'm going to show you guys my charts in a second. And there's some of the most beautiful charts you're ever going to see. If you want your charts to look like mine, you want to download this video. You can do it through the app, or you can go to PayHip and you can own that video forever. It's a new and improved video. It's an hour and a half. It's going to make your charts look like mine. And I do a little bit of teaching in it. All right. Again, if you go to my PayHip, if you go through the app and you just want to take individual classes, if you want to do futures, right? There's a lot of courses that are coming up. If you want to, I always tell people before you take a lot of other classes, because my classes are a lot cheaper, Go ahead and take mine first. Get that education, get that foundation. Because some of you guys might say to yourself, why am I going to spend all this money if I don't even want to do this? So, what I like to do during webinar week is an introduction to all of the worlds. And then you might say, oh, I don't even want to do this. So, I don't have to really spend that money. And then, if you want to get consultations or if you want to take a class where you're spending thousands and thousands of dollars, you now know why you're going there and you'll know what questions to ask. All right, and you can do a consultation with me so that I can also get you right. So take advantage of what we have that's out there. Again, the ultimate membership is $50 a month if you go through the app. A lot of people are taking advantage of this because you have access to all the videos and you got free access to all the webinar weeks. Any webinar week you want to go to, you just hit me up and say, Joel, I want to participate this week. If you're an ultimate member, you're going to get access to it, even if 3 or 4 months goes by. I know a lot of people that got COVID. And during webinar week, they weren't able to take it, but because they were an ultimate member, they were able to join the following month. There's different places, right? So this is being broadcasted in certain areas, but the Insider Trading Room, there's over 30,000 members there now. This is a community that me and my cousin created where we bump elbows with other professionals that are out there. Really love that room. I sift through every post. So you know how in other rooms you go through the rooms and there's a whole bunch of junk stuff and you got to sift through it to see what's what. No, I go through every post, and if that post is not educational, it doesn't make it on the page. It's actually a whole nother job to manage that particular room. All right, but you can also find me in the Ninja Trading Room. Anybody that's bought any products from me, you have free access into the Ninja Trading Room. Don't just go to the Ninja Trading Room and decide you're going to get in because you heard this today, or because you're in it, you can just refer somebody else. Nah, you have had to have bought something from me. If you bought any product, I don't care what it was, you get free access to that room. Make sure that you guys go to my YouTube page and let's get to you guys' stocks. Jeez, that was a lot. All right, so let's look at the S&P 500. Let's look at a clean chart and let's see what's going on, right? Let's go ahead and pull up. Let's see what's going on with the S&P 500. 500. All right, these were the COVID lows. As you can see, the market has done extremely well. This is the 200-day moving average. You guys are going to learn about this today. Anytime we see a stock, and this is learning. This is free learning, free education. Anytime you see this 200-day angled up and you see that we hit it, it's a buying opportunity. As you can see, we have not hit the 200-day moving average since July. I'm going to pull my picture back up so that you guys can see me. I'm going to take my shades off. All right. So that when I'm squinting, you really can't see me squinting. And I'm going to move this up to here. And I'm going to pull this back up so that you guys know who I is. All right. So, all right. So the all-time highs were up here. All-time highs was on January the 4th. We hit all-time highs the second trading day of the year, and we have fallen. Now, this is normal. Remember, we looked at the charts. This is a normal fall. Now, how much did we fall? Well, you can use this little tool and you can look and see how far we've fallen. Y'all see that? We fell all the way down here. That was a 12% drop. That's normal. We hit the 200-day moving average. So a lot of people decided that they wanted to buy. Now, using the what would Joel do method, I still wouldn't be in it because Joel is going to look for 3 green candles, but those 3 green candles has to go either sideways or up. We haven't got that. We had 1, 2, and I thought it was time to buy. Then we reversed. It has to look like this after hitting something like this. It has to be 1, 2, 3 going up or 1, 2, 3 at least going sideways. All right. Now, why don't these count? Because we didn't hit the 200-day. Let's go back to the last time we hit the 200-day. Let's use the what would Joe do method. The easiest, most simple method you are ever going to learn in life. I just said that in life, trading. It's like if you can't get the what would Joe do method, then trading ain't for you. It's nothing more simple. Right? You're going to hit this. And it's one of a few methods that I have. What's the rules, Joel? It has to hit the 200 day. What does the 200 day have to do? It has to be angled up. If this is angled up and we hit this, how many green candles are we looking for, Joel? 3. Well, Joel, can those 3 candles be going down? No. Can it be going sideways? Yes. Can they be going down? No. 1, 2, 3 up. Joel will get in somewhere around here. If you had used the what would Joel do method, you would have made all of these gains. Now, would you have come back to these prices? Yeah, you would have. You could run it again if you want to. Joel's going to wait until he hits the 200 day again, but some people take a shot at it because they know that the what would Joel do method works. So they would try it again. They said, all right, Joel, let me see if this work again. I'm going to try this one more again. It drops. It breaks. Joel says 1, 2, 3. Does this count? No, it's going down. 1, 2, 3. That's up. You could take a shot there. It made you some money, but then you would have made all this money, right? What if you tried it right here? Broke, 1, 2, 3, in. Did you make money? Yeah. What if it happened right here? 1, 2, 3, you get in. Ooh, you would have had to experience this one drop, but it came back. It came back. What if you used it here? 1, 2, 1, 2, 3, you get in, market goes up. The easiest strategy you ever gonna learn, ever. For free. Joel, why did you give that information for free? Shouldn't you keep it to yourself and only train like 5 people and charge $100,000? No, why? Why? When all of you guys can make all that type of money. I'm all about everybody being successful. The more people that are successful, the more blessings I get. The more people that are successful, the more blessings I get. I can bless 10 people, but why when I can bless 10,000? It's just numbers. If you're a numbers guy, you'll understand that. I don't care about the money. The money will come. I'm already a millionaire. I don't need y'all's money to make 10 million. It's cool. I'm throwing y'all money in crypto. The money I make from y'all, I'm throwing it in crypto. All right. So when y'all see me driving like expensive cars, y'all pay for that. But my foundation comes from, other things, right? Other investments that we're making, right? Other companies that haven't, we're investing in a company. Well, I can't really talk about that. All right. But there's just other ventures that we have. How about here? Well, Joel says that if it comes down and then it goes up and you got to count 3 greens, 1, 2, 3, 1, 2, 3. I done took this class, Joel, and they had indicators all over the place. I couldn't understand nothing. And then this cat, Joel, all he said was just draw this little line. Just draw this little line. All you need to know is how to draw a line and count to 3. If you're colorblind, you're going to have issues. All right. So if you're colorblind, you probably want to make the shades like really, really dark. And then this one like really, really light so you can see the shades. All right. And I've had a couple of colorblind traders. Like, that's why I'm not laughing. So Joel says, just draw a line. It breaks it. It goes green. 1, 2, 3. You get in and then you should make money. So what's happening right now? Well, Joel, we hit the 200 day. We broke that line and it's going green, but has it gone up or sideways? No. So should you be long? No. So you guys just learned the what would Joel do method on the 200 day moving average. So clap. I know I made it simple. And it's going to surprise you guys how much it works. Investing in this market is not hard. Y'all make it hard. I've been through where y'all been through. I've struggled like y'all struggled. I've learned every indicator on the planet and it didn't work. It's great for teaching you. If I want to charge y'all forever, I can tell y'all the secrets to doing it. Just continue to throw out extra stuff and make people learn all of this crap. Look, guys, look, I can make money off of y'all forever. Because I can go in here and say, hey, guys, this week I got the ADX that I'm going to teach y'all. And then next week, I'm going to teach y'all the ADXR. And then the next week, I'm going to teach y'all the ATR high breakout filter, and then guys, and it goes from A to Z. Like if I want my job to be to teach y'all forever, I got from A to Z to teach y'all forever, forever, ever, ever. But it ain't about that for me, right? What it's about is y'all making money, and to make money, you got to understand what you're doing. I want you to make money. I don't care about your little 50, 70, and 90. I care about it because I want you to get educated. But I want to hang out with the millionaires. I want to hang out with cats worth 5 and 10 million bucks. In order to do that, you got to go through the process because it's way more fun to go to a club with a millionaire than it is with my frugal friends. Oh, Joel, I don't know if we should get bottle service. Oh, Joel, I'd rather just stand. We at a club. We don't need to sit down. We don't need no booth. Joel, we don't need all of those appetizers. Why are you ordering 5 or 6 appetizers? Just order the ones that everybody's gonna eat. I hate hanging out with them cats. The penny pinching. Everything is a value. Like live a little. Live a little. All right. So that was the spiders. All right, let me pull up comments. All right, let's talk. So let's hold on. Let's pull up Ford. All right, let's get through your stocks. All right, we're gonna breeze through this. I had to teach y'all the method. You understand the method now. All right, let's look. Let's look and see what Ford's done. Ford was one of the most terrible stocks, and I hated Ford from here. Here's the story of Ford. Joel hated Ford. If you mention Ford to me, everybody understands that I hated it. I hated Ford. Don't talk about Ford. Don't talk about oil because this is what I saw. Joel ain't buying nothing that's been going down. What the? You can't make me buy anything that looks like this. But y'all kept buying it because you didn't know. And Ford dropped from $17 all the way to $4. Why did Joel start buying it? Why? Because Joel was a millionaire at this time. And Joel said, I've seen this process happen before. It don't matter how I feel about a company. At some point, it's going to get cheap enough to buy. And when it dropped all the way down to this price and it started to go up, and yes, we did get in a little bit earlier than we wanted to. I was actually looking over some stocks with a friend, Demetrius, and he brought it to my attention. He said, Joel, do you see these options in December? It's like 400,000 contracts being bought. At the time, it started to break this trend. And we were like, oh, shoot. Ford might be changing its downtrend from 2013 to 2021. For 8 years, Ford went down in price. But when the news changed, I don't care how I feel about something. I've seen it happen. Fool me once, you ain't gonna fool me again. I know how to make 100% or a 200% return. I know that if I flip $1,000 10 times, I'm gonna get to $1 million. I know that if Ford came from $18 and we sitting at $8, I can make 100% return if we get back to its all-time highs. What does that say? 88%? When it went back to its highs, that was 150%. Joe, how the heck did you get 150% return? This is how I did it. I hated it. I hated it. I hated it until things changed. It broke the trend. It went green. And Joel says, I don't care how I feel about something. If this is happening, fundamentally is going up. See, y'all don't understand that you can actually look at the fundamentals from a technical chart. That's the high level of thinking that a lot of you guys are not at yet. This is the result of something happening fundamentally. It took me a long time to understand that. I used to think charts were technicals and fundamentals was reading about it. It took a long time for me to understand that, wow, I'm looking at the result of a fundamental process of something bottoming out and people starting to buy fundamentally. And when the fundamentals change, the company changes. What happened to Ford fundamentally? They changed their whole infrastructure. They hired new staff. They started to go electric. They started to invest in electric. Some of their companies that they were invested in were about to IPO and be worth more than that company. Y'all know that during that time, Ford had an investment in Rivian. They knew that Rivian was about to go public, and the whisper, the whispers was that that company was going to be worth not only as much as this company, but as high as 50 to $100 billion. At the time, Ford was only worth like 20. How are they invested in a company that's going to be worth double, almost 4 times their amount? That's going to make them more valuable. And not only is that happening, they're going to have access to their technology. And they got 3 vehicles that came out that sold out. Fundamentally, Ford had everything that they needed to make investors like me and Demetrius invest in the company. This is what you guys didn't get. What you got was, I'm going to look outside, I see Ford, and when I grew up, Ford stood for fix or replace daily. I ain't buying Ford, Joel. Fords are the worst products that are out there because you don't know how to make money. You emotionally thinking about Ford. Don't nobody care about all that as an investor. All right? Talk to the millionaires. If the millionaires and the billionaires are buying it, you should be buying it. Point blank. I don't care what your Uncle Ed said. Well, Uncle Ed was smart. Uncle Tom, right? When the fundamentals change, you got to change with it. And I became a Ford bull. And everybody was like, how come Joel's just jumping on the bandwagon because it went from 4 to 8? And that's not why I jumped on the bandwagon. I jumped on the bandwagon because we saw $10 and $15 strikes being bought 1 year later. We saw leaps being bought on Ford, and we didn't understand why. And then all of a sudden, the news started to roll out about what the company was going through. And then sometimes, if you fundamentally see what's going on in a chart, you can put yourself in a position to make a lot of money. And then when a bunch of the haters came in the room and was like, Joel, you don't know what you're talking about, I laughed all the way to the bank, like I always do, right? And there are going to be times Ford drops. There's times where stocks drop 30 or 40%. That's why I'm not tripping off of a PayPal. I got people right now talking about how Jim Cramer and me are the worst traders ever because we called PayPal and PayPal just dropped what, 25, 30, 40%. Have you looked at PayPal's charts? That was Ford, guys. Have you looked and what you think Ford can do? Well, let me finish with Ford real quick. 200-day moving average. We're probably going to get down to this 200-day. When we get down to the 200-day, what are we going to do, guys? We're going to wait for it to hit. We're going to wait for the trend to go up. And then we're going to wait and see. We're going to wait until we see 3 green candles. You could have bought Ford late for $13 and still got a 100% return. Y'all see that? What if you bought it down here? It was angled down. I get it. That's why I said we got in a little bit early. We got in right around here. I got in the $7 range. We were buying $10 and $15 strikes. So y'all can see that we made a whole bunch of money. And then I was buying the stock too. And I rode that stock, guys, I rode that stock all the way up to here. And I just recently sold. Everybody's like, why did you sell, Joel? Because this is what happened. This is why I sold. I sold right here, right around the 22, 21 range. Why? Because I knew it was probably going to hit 19, probably come down to 16. If I want to rebuy it down there, I will. But I'm done with Ford. Ford hit a value that I didn't even think it was going to get to for 4 to 5 years. All right, it made me a whole bunch of money and the trade was over. Then you got 1, 2, 3 reds to the downside. If you were able to read charts, this would have been easy. But you guys got so many emotions wrapped up in it. You can't get around your emotions. You got to get around it. Okay? All right, that was Ford. Let me pull up hold on. Let's pull up Snapchat. All right, Snap. Snap. Oh, Snap. This is what happened with Snap. Guys, I wrote this out for my I I I have a video that comes out for my members every single month. I created this chart almost 3 weeks ago. I already had the values in place. I told everybody that the gap was probably going to fill, and I told my members where to buy this at under $30. I said is 100% buy. Had to buy it. Why? Because I was looking at this gap over here. A gap is when a stock jumps in price overnight. So let's say the stock at 4 o'clock closed at $28, and then the next day it opened up at 36. Gaps happen when earnings comes out, right? Anytime there's an earnings, you're going to see big gaps. It's either going to gap up in price or it's going to gap down. You see how there's earnings here? There's a gap there. There's a gap here. All right. There was a gap here. 80% of gaps fill. That means at some point in its lifetime, usually the price will go back to where this gap started. So when Snap started to fall, making investing and trading easy, the very first place I looked at was I looked at my chart and I looked for all the gaps and I said, oh, there's a gap right there. We were already underneath the 200 days, so I said, all right, if it starts to go down in price, I know I can draw a support line. You guys are learning about support resistance lines now. I know I can draw a support line here and maybe a support line there and maybe another support line here. But what was interesting was this gap. So I put this blue line here and I said, you should buy under this mark. Guys, look at this. I called that perfectly. Perfectly. How many traders y'all know can call a trade 3 weeks in advance? All right. Why? Because I've been doing this. I didn't become a millionaire by reading a book. I'm not teaching y'all from reading books. Experience. I decided not to teach y'all until I was capable and had the receipts and had the trophies to feel like I can teach you. That's why if you come to me and I'm trying to teach you, I am arrogant in a sense, because when you put in over 25,000 hours of work and you got receipts to prove it and you gone through the psychological path, you are going to feel some type of way when people come to you and they don't not honor, they take advantage of you. I got a lot of people in the room that take advantage of me, right? They take advantage of my niceness. And there's got to be some type of respect in the room. So anybody that's disrespectful in the room, of course, we kick them out. But there's got to be a level of respect, right? I'm going to respect you as a man or a woman, just like I deserve to have that type of respect. But I'm also going to respect what you've gone through and what kind of knowledge you have to give to me, and vice versa. And that's just where I'm at in 2022. And I don't want people to get offended by it when I ask somebody, all right, what have you done? Like, why should I listen to you? And I get a lot of people to get offended and I got this and I got that. And I'm like, okay, you got all this, you got your series 6, 7. All right, what have you done? And if you can't answer that, like, it's just a simple question, right? Why should these people listen to you? Why should I, and then I'll hear, well, I'm a newbie. So, this is what I was looking at. And then it doesn't mean that I'm better. It's at least honestly, I know where you're at. Oh, okay. Because I made a lot of money off of newbie calls. Like, believe me, guys, a lot of newbies have given me stuff off of what they've seen. And I've noticed that they were natural traders or they naturally understood how to look at certain things in the market. So me asking questions is not to offend you. It's just that I need to know where you're at, because I'm at the point in my life where I can't waste time off of listening on a strategy or a plan that ain't never been put into place. And I see that a lot in the room. So when I go after people, they take it as an attack, and it's not an attack. It's I kind of want to know, so that if I apply this, where's the statistics to back what you're doing? All right, that's why I wanted to teach you guys the method, so that when we go through this method, everybody understands the method in the room, right? 200-day line, 3 candles, buy. If you can't understand that, then this is not for you, right? And then when you get to short-term trading, we're going to look at different charts as well, but I want everybody to be able to look at the market the same way. So it bounced off of that move. I wouldn't necessarily get in now because we haven't got 3 candles, but I know some people, this is a little bit of gambling in my opinion. If you wanted to buy here because you wanted to fill the gap, you would have caught this whole move. There was time to get in. Remember, this is a day chart. It's been 1, 2, 3, 4, 5, 6, 7 days. that you could have got into this trade. One, two, three, four, five, six. You could have bought this down here at the 28 range. So getting in on this snap trade was easy. We talk about Snapchat every single week. Even in the room, I told everybody when to buy, right? I'm buying it. I'm loading up on it. I believe in the company. I thought the company was too small for what they want to offer. You got Facebook almost sitting at $1 trillion, and you got Snapchat. It's not even that big of a company, right? Can I make 100% return? Well, we came from $83. If you bought this at $30, let's say you bought it at this line here and you rolled it all the way up to this $80, you're going to make 175% return if we go back to highs. And guys, Snapchat, for the first time, this is interesting to Snapchat, for the first time in their existence, turn a profitable quarter. That means that they made money for the first time. I know you guys are like, how can a stock even go up if it doesn't make money? Because the stock is not the company and the company is not the stock. Bezos made that statement. But if we ever go back to its highs, now why wouldn't we go to our highs, guys, if Snapchat is now making money? You got a very high chance that when a company becomes profitable, not only do they go to their all-time highs, this is when the growth starts. Y'all heard what I just said? When Tesla finally became a profitable company, y'all know what year that was? 2019. Y'all know when Tesla started to run? 2019. Amazon, when it finally became a profitable company, that's when the moves start to really happen. And Amazon was unprofitable for like 10 years. I know a lot of people don't even know that. There's companies out here like Uber that I think Uber might have turned its first profit, but these companies are companies that haven't turned profits yet you guys are investing in it. When they become profitable, that's something that you want to listen out for. When that company becomes profitable, that's usually when the growth starts. I actually think this is where the growth starts for Snapchat. That's why it's up 55%, because other traders and other millionaires and billionaires understand the language. They know what to listen out for, and they know mutual funds love to hear this. And while Facebook is struggling, you got a company like this that's profiting for the first time, and it's worth like I'm just throwing out a number. It's like 1/20th the size of of Facebook. Actually, let's go see how big this company actually is. Let's see how big it is. Snapchat. This is Yahoo Finance. Snapchat. Fundamentally, Snapchat is a $80 billion company. Y'all know yesterday it was what, 60 billion. It was $60 billion yesterday. It grew $20 billion in size in one day. If Snapchat is worth $80 billion, how much y'all think Facebook is worth? Do y'all think Facebook is twice this? I have some people that think Facebook is smaller than Snapchat. They're like, Joel, my kids be on Snapchat all day long. Facebook probably worth what, 20 billion? If Snapchat's worth $80 billion, how much do you think Facebook is worth? Don't surprise y'all. $902 billion. That's how much bigger Facebook is than Snapchat. 10 times. Now, does that even make sense? Why is Facebook 10 times bigger than Snapchat? Either one or two things. Either Snapchat is too small or Facebook is too big. Doesn't matter. Because in either situation, that means Snapchat's going to get larger. Because even if Facebook drops in price to 100 billion in size, well, it ain't going to, I don't think it can do that. Let's say it dropped to half its size. That's still 500 billion. Let's say Facebook lost 75% of its size. It's still going to be 3 times bigger than Snapchat. Facebook can lose 75% of its market cap, guys, and it will still be worth 3 times bigger than Snapchat. Doesn't make any sense. I've been telling everybody it don't make any sense. Either Snapchat is too small or Facebook is too big, but that also means that Snapchat has room to run. Because even if Snapchat became a quarter the size of Facebook. Facebook is sitting at 1 trillion. Even if this gets to 250 billion, you make 3 times your money. Three times your money. Millionaire challenge, right? This is the type of companies, in my opinion, can get you there. You got to know what to look for so that you understand what to invest in. All right. You got to look at where it can go to, the size of Facebook or a percent of Facebook. And then you got to see if there's growth potential there. What has it done in the last 5 years? Well, in the last 5 years, if you had invested in it at these lows, it did run from $7 to 38. That is a crazy move, guys. Like 7 to 38. That's amazing. But a lot of you guys are not going to buy it. Okay? I don't want you to do it in your in your in your 401k. Well, you can't do it in your 401k, but I don't want you guys to go out there and change how your foundation is in place. But you should be doing it maybe on the side. All right, let's look at oil. Let's look at XOM. Okay. Let's look at XOM. Actually, before we even look at that, let's look at how much these options are up in one day. All right, this is gonna make y'all mad. If you had bought if you had bought if you had bought Snapchat yesterday, do y'all know that the options are up 500%? That means $100 investment will be worth $500 today. $1,000 investment would have been worth $5,000 today. A $10,000 investment would have been worth, yes, guys, $50,000 in one day. That's the type of gains you get in the options market. Remember, the stock is up 55%. The options are up 10 times that amount. All right. That's the type of gains you get in the options market because you're controlling 100 shares, right? Take my options course. During webinar week, I teach you stocks the first day, macro view of the market, and it's for your newbies, your advanced traders that are trying to create their foundation so that they can get to millions. That first day is how we do it. The second day is how to trade, right? How to trade stuff like the options market, how to make a ridiculous return. The last day is how I teach you guys how to day trade. So, for example, let's say you woke up today. I haven't even looked at these charts. Let's say you woke up today and you wanted to trade Snapchat and you said, all right, I want to trade Snapchat. I know the news already came in. Joel already done said how he up 55%. How could I have made money today being late? The answer is yes. But we need to know if we're going to go up or down. So I always tell people to use the what would Joel do method. So let's say you were trading this and you were using my method of teaching, right? My method of teaching is very, very simple and easy, right? I don't get too complicated because the more you complicate things, the more likely you guys are going to get paralysis of analysis. I see a lot of you guys teach that way. All right. I don't want paralysis of analysis. I want to be able to make money today. All right. So let's say you wanted to make money today. Now, I'm not going to encourage you guys to buy this, but let's say you were using the what would Joel do method. First things first, you want to see how much Snapchat moves. You're going to see the Snapchat moves $3 a day and we up 13. So that should have told you from the start, don't buy it. It's up too big. You missed out. But let's say you just put a simple line here. And you said, Joel says that if I'm day trading, I can pretty much look if I get in and out the same day. And we're going to get the XOM in a second. If I get in and out the same day, I got to go with the one with the most volume. All right. If I go into my options chart and I search for the one with the most volume. So what's today's date? The 4th? Oh, I'm sorry, guys. These are options for last week. These are options for today. They were up 900%. Sorry, I gave y'all the wrong expiration dates. Next week, options were up 600%. But let's say I wanted to look for the volume. Which one had the most volume? I was trying to figure out which one. Joel's going to teach you how to go for the one with the most volume. So you would have known before you even opened up your charts to go for this $40 strike. Soon as this started to break this trend and you got these greens, you would have said, all right, I'm going to get in right around 9:38. Joel says get in right around 9:45. So you're going to get in right around 9:38. How much money could you have made today getting in this late with late news? Well, you know which option to pick. I teach this in 60-minute trading. You're going to pull up that chart. Joel says he got in right around 9:38. You're going to get in sometime around 9:38. How much money could you have made? Well, let's see. Joel will outtrade any day trader any day because my methods are so simple and I know what to look for fundamentally that this became too easy for me. It's too easy for me to make money. Could you have made 100% return? You sure should. You sure could have. I got traders that be trading all night long. They be having study groups, and I just be laughing. I'll be like, look at these non-traders. They be pulling up all these indicators. Well, Joe, you got to draw these support and resistance lines. And I'm like, guys, remember how I told you how the charts fundamentally showed you what happened? Like you're pulling up technically what the charts are, but you don't even have to do the fundamental work. It's already done for you. And you look at the results of what fundamentally is happening. That's why I became a 1%er. Because I started to understand why things happen. Right. So when you understand why things are happening, it becomes a lot easier to trade. I know that I can make 100%, right? But I stopped trying to choose things because fundamentally, does Joel Harrison move the market? The answer is no. I'm not a whale yet. Is the indicators that I'm looking at what everybody else is looking at? Chances are they're not, because the people that are on this call, the people that are using the technical side of the market, we're smarter than all of the money managers that are on TV when it comes to technicals. All right. We're smarter than a lot of the wealth planners and a lot of the mutual fund managers, right? Because they're not trading the way that we're trading. They're actually not even trading, they're buying and selling. So fundamentally, we got to understand who we going up against. All right, we're going up against a lot of fundamental investors, but we're trading. So because you know that stocks are either going to go up or they're going to go down, right? They're going to go up or they're going to go down. And when they're going to go up, you got to understand that you get a higher return on your investment when you're buying where everybody else is buying. So that's why I always tell people intraday, and this is key, intraday, when you're getting in and out the same day, you want to buy what everybody else is buying. You want to buy what the millionaires and the billionaires are buying, not what you think it can do. And if you get really, really good at it, you kind of will know where stocks are going to every single day when you wake up in the morning. A lot of you guys are going to get it. A lot of you guys aren't. 99% of you guys are not supposed to get it. 10% of the world owns 90% of it on purpose. And even out of that 10%, only 1% know how to do what I'm doing right now. I would even say less than that. So out of 100 people, there's 30 people on this call, not even 3 of y'all are going to get this. Maybe one. One out of the 30 people on right now will actually get this, will apply this, because we still think that it's information and it's all this other stuff that we need to get. And it's not. It's never has been. It's, are people buying it and selling it? Where can it go? And what is everybody choosing? What are the market makers choosing? Because that's where you're going to make the money, because they move the market. And then how much money can you make? See, making 100% return being late is nothing for me. I could have came in at 9:38, guys, and you could have made a 144% return in 20 minutes off of getting news late. If you know what to look for, if you're trading from somebody who has a proven record. The reason why it's a lot harder for a lot of you guys is probably because you're learning from some people that make this hard. Simplify what you're doing. I'm going through a process right now where I'm simplifying everything. In order to get to certain levels, it's kind of like you got to be a Buddhist monk. You got to cut out all the stuff in the world that's bringing you down, all the negative things that are coming at you, all of the non-information that's not going to help you get to where you want to get to. You got to cut that stuff out if you want to get to those certain goals. You got to. And as you get older, you become better with it because you're almost forced to do it because life happens and you only got so much of yourself, right? If you got to give yourself to a bunch of different people and I want to give them the biggest percent, I got to cut out certain things. So you got to cut out a lot of the things that you guys look for in the market. You got to accept, am I going to lose or win? And if I lose, this is how much I'm going to lose. And if I win, this is how much I'm going to win. And that's what's going to get you guys to the level that you're going to get to. And if you're down 20 or 30%, it's part of the process. You guys saw Amazon, Apple. I showed y'all this on purpose. I showed y'all the largest companies on the planet because I wanted to show you that even the best companies are going to drop 20 to 30%. And if you don't hold on to it, you ain't going to reach that level that you want to get to. You think that you can. You think that you can get in and get back in. I'm telling you, you can't. You can't. That's why you hire a money manager to manage your money. And then you try to do it on your side and you protect yourself from yourself. You do these things that I'm telling you guys to do, you're going to get to the levels that you want to get to way faster because you're listening to somebody who actually did it. Take this information or leave it. All right. So you could have made 144% return. That trade was over with, right? It was fast. It can be done. You no longer have to feel like you have to have all this information 3 weeks and 4 weeks earlier. If you know how to process information and know what to do with that information and know how to do this, then making money is going to be extremely easy for you. And it's been extremely easy for me for the last 4 to 5 years. All right. But I'm showing you the processes. All right. Let's look at XOM. Why is XOM so popular right now? Because oil, guys, oil has been going through the roof. It just has. I've hated oil, but let's look at the chart of oil. Remember, 200-day moving average. We gonna keep everything simple. When you look at Joel's chart, you're gonna think clean, simple, basic. That's what I want you to think about when you think of me. Joel keeps it super simple. He ain't about all that other extra crap. Because the market either gonna go up or the market's gonna go down. You either gonna lose money or you're gonna make money. And then if you're losing money, it's just a certain amount of money you lose, and then you go into something else. Don't make it personal. Because we don't know what the market can do, but you want to be in the market when people are buying it, and then you want to, if you're trading it, you want to be out of the market or shorting it when it's going down. All day long, every stock that y'all give me, I'm going to show y'all the same process because if you have a proven process, I don't give a dang what I pull up. It's going to show you the same exact thing every single solitary time. Oil's been down for how many years? You could have stayed away just by seeing this line here. I didn't know you was about to give me XOM. If you wanted to short, you do the opposite. It hits the 200-day, it turns red and goes down. You make money to the downside. Hit it here. Watch. For you guys that want to buy puts, that's how you buy a put. Hit the 200, go down, turn red, you make money. But Joel, I missed that move. All right. Hit the 200-day, broke that line, went red, went down. You make money. But Joel, I missed that move. All right. Got close to the 200-day, broke this line, went red, you make money. But Joel, I missed that move. All right. Broke this line, went red, went down. Because the move was down. I know some of you guys been in oil for 10 years. I got family members who, just because they stubborn, just stayed with oil just because they didn't want me to be right. There are a lot of traders that will trade something just so Joel won't be right. I'm like, all right, you can lose 6 figures because you don't want me to be right. Don't make me none. And all of the while, I'm making money. I said stay away. But I get it. I didn't have the credentials way back here when they were buying. I do now. And now I'm buying and they mad. They mad. They like, you just trying to get on the train. I sure am trying to get on the train because now it's the opposite. It hit the 200-day. It's the opposite now. It goes green. You make money. Joel, how come nobody else makes it this simple? Because when you go through a process, that's how you know to make it simple. You can't make things simple until you've fully gone through the process. And then you realize, oh, I don't listen to this person and that person, and this person is FOS, and this person is FOS, and they're a fraud, and they're a fraud. You can just see it. Hits the 200, goes green, you make money. Hits the 200, it goes green, you make money. You would have made money down for 10 years and now you're making money up. I can tell you when to get out of something and I can tell you when to get in. And I don't need 50 charts. I don't have to go back and forth, back and forth, and back and forth, and back and forth, do 20-some different charts. But y'all, I'm gonna look at the 5 minute, the 20 minute, the 1 minute, the month, the day, the week, the quarter, and then I'm gonna pull up the stochastics, the MACD. For what? The stock is gonna go up or down. It's gonna go up or down. They either gonna be buying it or they're gonna be selling it. Why you need all that stuff? You don't need it. It's just extra stuff for insecure people. Indicators, the more indicators you got, the more insecure you are. I can tell insecure traders a mile away because I've gone through the process. I know what to look for. Y'all been in the club before where people walk up, you see what they have on and they first line, and you already know where the conversation's going. That's where I'm at. I'm like, oh, okay. They ain't making no money. They don't know what they're doing. Oh, they are fraud. Oh, they're just traders. Oh, they're just an investor trying to trade. Oh, they're traders trying to invest. They think they're knowledgeable, so they're doing this because they're insecure on that. I get it. I see it all day long. Stocks are either going to go up or down. You guys got to figure out the type of money that you can make by learning how to pull up the information and knowing where it can go. If you don't know where a stock can go to, then there's no reason why you should be buying it. You should be going through the what would Joe do method of analyzing who, what, when, where, why, how. Answer those questions. Who, me, what, oil, why? Because the 200-day is up. Where? On the TD Ameritrade platform. I still need to know why. Okay, you're buying it here. The 200-day is up. How long are you going to be in it? I don't know. Well, that's the problem. I just figured you just paid me $50 just to figure that out. When you could have asked yourself those questions. See, I love consultations where they come to me and there's a question that they just really can't answer. Most of the time when you guys come to me and you done paid $50, it's because you don't know who, what, when, where, or why. You think you know how because you took a class. The biggest problem. There's 7 questions you can't answer, but you took a class on how to do something and you don't understand why the heck you did it. Because the teacher didn't explain the who, what, when, where, why, and the how of why. Why am I doing this? What's the goal? What's the goal? All right. You got to figure out the goal. So we're way up here. Should you be buying it way up here? Nah. Why should I be buying it way up here? But where can it go to? Well, let's pull up the month. Looks like it can go all the way up to 104. You see how I thought it was a bad chart until I saw where it can go? Watch what I do. Watch this. Don't take me but 10 seconds to do this. All-time highs was 117. Is this a bullish stock? Of course it's a bullish stock because the 200-day is now angled up and it hit the 200-day twice and it's running. Why you think I came out and said, all right, guys, y'all should be buying oil. Get on the oil bandwagon right now. But Joel, it's all the way at 81. I don't care where it's at. I'm thinking about where it can go. And this bad boy can go all the way up to 117. Now, 117 might not mean a lot to you. So you got to come out and say, well, if oil goes from $81 to 117, I'm going to be up 50%. There's still 50% move to the upside in oil. 50%. That's the goal. How long can it get there? Well, it's got to move $20. How long did it take to move $20? Well, shoot. From 80 to, it's got to move $40. The last time it moved $40, it took from November till now. Well, it's February, December, January, February. Realistically, if I'm going to wait for this to hit 117, if it's got a straight shot to it, the minimum amount of time is 90 days. How many of y'all go through that process? Be honest with yourself. Dang, Joel, I bought a 7-day option on it at the 120 strike because you said go buy the most volume. You mixing strategies. I see that all the time. Y'all will take one little bit of information. Joel, I learned about that average true range. I saw that the average true range of XOM was, let me pull that up. The average true range is 218. So I bought a strike price on it, and I went $2 up. Okay, you took that little bit of information, but that's not the strategy. Take the class and learn the strategy. The class is what, $100? Take the class. All right. Anyway, so it looks like we got some room to run. Okay. Let's pull up Apple. Let's pull up Apple. Apple. Let's look at it as a day trade and a regular trade. I got time, guys. I got time today. I knew I was going to be on for a minute because I haven't done this in a while. So let's pull up Apple. All right. Apple. 200 day. What's the rule? First of all, let's take all this off. Let's pull up my charts. All right, blue line. Now, let's see. What I want y'all to do is I don't want you guys to just buy it just because Joel buys it. I want you guys to say to yourself, if I'm going to trade like Joel says, I need to see that it actually works. Watch this. It's 216. Watch how fast I do this. Joel says 200-day draw line green should go up. All right, let me see if it works. 200-day draw line, 3 greens, it went up. 200-day hit, I'm sorry, it went down. 200-day went green, went up. There was some pain right there. Made money. That's 2. What year was that? That was 2016. Joel says hit 200-day, breaks line, goes green, should make money. It made a little bit of money, then came back down. We'll still count that as a win. Joel says hits 200-day, goes green, should go up, a little bit of pain, but it still eventually went up because you're protected by an upwards 200-day. Hits the 200-day, goes green. Joel says get in, make a little bit of money. All right, so far you didn't lose. 200-day, I see this, but aren't you losing here? No, that's how you lose. Because what little piece did you just see? A lot of you guys just saw that, I finally saw a loss. Because that's what your brain is saying. It's not a loss. Hits the 200-day. Did it break the trend yet? That just saved a bunch of y'all a whole bunch of money. This right here, this one little line that y'all refuse to learn, that just saved a ton of money, hundreds and thousands of dollars. That one little line you refuse to learn. Because when it hits this 200-day, your best friends, ooh, just buy it, hit the 200-day. Yeah, but Joel says it has to break this trend. F Joel. Look how low it is. F Joel. It's at 44. Oh, 40, 42. Oh my God, 38. Joel was right. Let me get out. Then when it breaks the trend, and then it goes green, and then when you get in, you just saved yourself all this pain and suffering. Got in when Joel gets in using the what would Joel do method. You just caught all of that. That was 2019. That's 3 years, guys. 0 losses. Happened again right here. And we're talking about the largest company on the planet. We ain't talking about no little penny stock. Hits the 200-day, goes green. Joel says gets in. He makes money. Joel, I'm tired of seeing how much money I could have made using your method. Oh, guys, this was the March lows. You remember the pandemic? Remember the pandemic that was happening? I get it. Hadn't happened in 100 years. Everybody on TV says the world coming to an end. The sky is falling. The sky is falling. The sky fell. We hit the 200-day. Y'all know the method now. You just learned the method on this free call. I ain't charge y'all. I ain't charge y'all thousands of dollars to do this. Hit the 200 day. Broke the trend. It's just three things. Hit the 200 day. Did it do it? Yes. Did it break the trend? Yeah. Did it go green? Not yet. It went green here. Should I buy here, Joe? No. How many green are we looking for? Three. I see it. One, two, three. There's a red in between. And it went down. One, two, three. I see it, Joe. Green. Is it here? Yeah. That's where Joel got in. Everybody said I was crazy. We all out of work. I said, but we sitting at home. And it's the largest company or one of the largest companies in the world. Do you really believe that Apple ain't gonna make money? Who cares? Even if Apple didn't make money. What moves the market is mutual funds and pension funds putting your money into the market. At some point, they're going to put your money back in. They're not in the business of putting your money in a savings account or under your bed. You smart people out there, they're in the business of managing your money. They got to get in at some point. They're using the 200 day as an area to finally take a shot. Even if there's COVID, because the rich don't care about you. McDonald's and all of these big companies are going to keep flourishing. Remember, all these different companies went into what Uber Eats started to become big, and they started delivering their food in any restaurant. I kept telling people, like when I started seeing restaurants that weren't delivering food because they didn't want to pay that extra Uber price for it. I ain't paying that extra $5 or $6. Y'all better just come into my restaurant. Well, those restaurants are no longer around. And sorry if you're on this call because you own one of those restaurants. If you didn't make the switch over, you got left behind. This is what happens all the times during periods like COVID, during periods like the real estate market crash. The companies that made us fall in the first place, they all become bigger and all the smaller companies get wiped away. It's just money. It's just that everybody ain't supposed to make money. In order for me to make money, I got to take it from somebody else. Money is like energy, neither created nor destroyed, just transferred from one entity to another. It's transferred from your account to my account. And I'm going to take your money. I'm trying to show y'all how I think and why I continue to take your money. You better get on the right side and understand how to be the one taken instead of the ones getting took. And there are moments where you get took. There is. And you just got to brush it off and get right back on the horse and say, you know what? This hasn't lost but one time in what, 6 or 7 years? Even if it lost twice in 6 or 7 years, that percentage of winning is still ridiculously high. 200 day angled up goes green. Take a shot. I took a shot. That's how much money I made. Y'all see that? It was easy. It was mad easy. Didn't take 20 some indicators. I didn't have to see. I didn't have to go to 5 different charts to figure that out. I said to myself, are they buying or are they selling? Well, they were selling. Fundamentally, they were selling. And they sold to an area where everybody likes to buy things on discount, which is what we call the 200-day moving average. The 200-day moving average is the most used indicator on the planet, hands down. If you didn't know that, your teacher ain't taught you that, fire them. They don't know what they're talking about. Everybody in their mind. You can't even turn on Bloomberg or CNBC without understanding what the 200-day moving average is. They talk about that and the volatility index every 10 minutes. So you've been lost to watching TV and you got this teacher charging you thousands of dollars and they're teaching you stuff you don't need. Why do I need to know this and need to know that? I need to know, why am I going to make money on this chart? Learn the fundamentals and then the game becomes easy. And then if you want to add a crossover or, a little pizzazz to your game, then you can do that. But y'all don't even know the fundamentals. And I sound like this because y'all don't. Y'all don't. I'm being as honest as I possibly can. I will stay in business forever because y'all refuse to learn the fundamentals. You want to learn all of this other stuff, and you're learning from people that y'all ain't vetting. It's just what y'all do. Stop doing it. You become successful by A, being coached and learning from people that aren't in the same place that you're in. You got to talk to people that are above you if you want to get up to their level. This is just how it works. I rarely have seen any industry where it works the opposite. It just doesn't. You want to work with people that are knowledgeable and have years and experience. That's just how it is. And it's not just an intern. Like you can work for a company and be an intern. Like even my wife, right? Even when she went through residency, she went through med school. Took her 4 years to go through med school. Then she couldn't just practice being a psychiatrist. She had to go to residency and work for 4 more years, not even in her line of work. She had to understand what being a doctor actually was before she could even specialize. And she had to learn stuff she didn't need. She had to learn the fundamentals of doctoring. And then a company came along and said, wow, look, I see the process that you've gone through in those 4 years. We know that you're smart. We know that you went to an Ivy League school, but we can't just hire you because you're an Ivy Leaguer. You know how many Ivy Leaguers that are out there that are doctors that can't that aren't practicing being docs? You got to go through the peer, you got to go through the process, and then you got to show some results after that process. Then you get hired. That's just how it works in every other field. But when y'all are talking about your money that you want to retire with, that's gonna be the difference between you working or not working. You guys are not gonna vet the people that are teaching you. That's on y'all. That's on you. All right. Anyway, that's very important. This is Millionaire Challenge for a reason, because a lot of what y'all think making millions in this stock market game is not what you think it is. It's all the other stuff that I've been talking about. This is just, where am I going to place my money? This is the easy part. Most of you guys start here. You spend too much time reading about Apple. That's great. I want to buy things that I know and I love and I feel comfortable buying. I do. I'm not telling you not to do that. But just because you love a company and you read up on it and you understand it doesn't mean that you're going to make money on it. I've seen great companies go down for years. I've seen terrible companies make you fortunes, right? I've seen it. So you got to understand fundamentally what's happening and then know the process that you want to go through to get to that value or that money that you're going through. And it doesn't involve taking classes all the time forever. Some of you guys are serial class takers. Stop taking classes and start buying something. Buy something. That's where you're going to get the experience. The more you buy, the better you're going to get. The more you lose, the better you're going to get. The more you stay away from penny stocks, the better your accounts are going to be. The more time that you give for those stocks to go up, the more money that you're going to make. The more that you put into yourself monthly investment wise, the faster you're going to get to those millions. It's just simple, basic rules, fundamental, basic rules that's going to get you to where you want to go. All right. So Apple is way up here. All-time highs was 183. Just using our charts, we're only down 4.5% from the all-time highs. As a trader, Apple is great to have in your portfolio. I ain't expecting Apple to make me rich. Apple's already a $3 trillion company. Like, it's got to go to 30 trillion in order for me to make 10 times my money. The amount of money that I want to make is not there yet. I already own it from way back here. So don't get me wrong. When you're in something from way back here, I'm up 150, 200%. I don't have to add to it. I can sit in it because the amount of money that I put into it has doubled or tripled in value. And now it's an amount that I can just let sit for 5 or 10 years. And now I can stomach. If you go up 300%, guys, I can stomach a 50% drop. Because now I'm only going to be up 150%. And then if it runs again, like it does, and you guys have seen Apple do it, that's how you make money in this game. Let's say you wanted to make money today. And I got 15 more minutes. And I'm a breeze through you guys' stocks at the end. Let's say I wanted to make money today. Apple. I haven't even looked at the chart yet. I see that it's down. What if I wanted to make money today? You saw that the news came out last night. Did that mean I had to study all night long to know what to buy? Heck no. Y'all don't know what to look for. This is what old Jolie Joe does. Y'all make trading hard, Joel don't. Joel literally came over here and said, man, if I'm gonna buy Apple today, I'm gonna buy this strike right here, 172. Bam, that's it. Case closed. Huh? But Joel, didn't you have to check the support and the resistance? And then you have to for what? Y'all don't know what to look for. Y'all think all that other stuff matters, and it don't. It don't matter. What matters is if I'm going to get in and out the same day, I can do this. I can go after volume if I want to get in and out the same day. But I have to say I'm getting in and out the same day. And yeah, you got to pick what times you want to get in. So watch this. I see that everybody was buying this strike, 172. The only way I'm buying this strike is if everybody's buying. I got an indicator that tells me if we above it. If we above it, I'm buying it. If we below it, I ain't. I already know what strike I'm picking, 172 and a half. But I have this option alert, and because you don't know what to do. 172 and a half strike. That's all I care about. You can go down or up if you want. All right, we can go to the 170 strike, make a little bit less money. But for now, let's look at the 172 and a half strike. I kind of like to go out the week before, or if we're expiring today, I like to go a week out. So actually, guys, I probably would have bought this 175 strike. Has the most volume. Could you have made money today? Well, first of all, was there a way to trade? What's Joel's rule? Buy when people are buying, sell when people are selling. Joel, it can't be that easy. Buy when people are buying, sell when people are selling. I mean, I know it sounds like it's easy, but y'all don't do that. Y'all want to buy when people, I get it. When you're investing, you want to buy when people are selling. But when you trading, you don't want to buy when people are selling because you see the market one way. That's why it's the opposite. You want to buy when people are buying, sell when people are selling. Deal with how I'm talking if you want to make some money. If you want to make some money, you better listen. This boy know what he talking about. Joe pulls out his trusty little thing over here. Now, today's Friday, right? So Joe probably would not have traded this to this upside and down. Joel wouldn't have been in until here, 11:44. Y'all see that? I would have got in at 11:44. Joe, I can't understand from your charts what I'm looking at. All you need to know is that this yellow line, if I'm above it, you buy, below it, you sell. Above it, you buy, below it, you sell. Above it, you buy, below it, you sell. Above it, you buy it, below it, you sell. It got above it, you buy. You already know what strike to buy, 175. I ain't even got to go look at it no more because if it's got that much volume in the morning, it ain't changed. Everybody's going to buy that strike because the smart people like me are all going to go to the party together. We don't care about no other strike except what everybody else is buying. That's it. Joe, doesn't this have to go to 175 for you to make money? No. Who taught you that? I just paid $10,000 for an options class and they didn't tell me that you could make money and it don't even have to hit the strike. Well, you need to get your money back. So we know it's the 175 strike. We know that we're going to get in right around 11 o'clock. Well, what time was it? 11:40. Let's see if it trade. Let's see if that trade panned out. I don't even know if it panned out or not. Got in at 11:30. How much money could you have made? I don't know. Joel would have got in sometime around, let's do a clean chart. It wouldn't have been much. But you could have traded this late. You could have got in right around that 11:42 period. What time was that? Right around here? 11:42, 20:40. I would have waited till it was green. What time was it? Let's just say, I don't know. I know that's 12:30. It would have been somewhere around this 1:30 strike. Could you have made money? Well, Apple's already up big today, so you should have known not to get in. But even if I got in late, you could have bought it for 120, guys. This bad boy went to 180. You could have got into a trade late late, late, late in the day. You could have been out in Cali and woke up after the market opened, didn't even know Apple was up big today. And you could have made a 44% return in 1 hour. Then the trade was over. It's still up 24%. Sometimes Apple don't go up 24% in a year. You just made it in an hour listening to some dude that gave y'all this information for free, and you still trying to figure out this can't be real. Why would he give this out for free? Because I'm not like everybody else. I keep telling y'all that. If you found this room, you are lucky. You must have had the energy that I was putting out there for you to learn this information, because I'm giving it to you for free. And I'm only attracting good energy. That's just my thing. I'm putting out blessings and I get those blessings back. You put out nice things for people, you get nice things in return. I learned that from my wife. Actually, I probably would be an asshole if I didn't marry my wife. She taught me how to be a better person. All right. And it starts with treating other people with the same respect that you would want them to treat you. And to always want everybody to win. I want everybody around me to win. All right. I don't hate on anybody, right? I only hate on people that hate on me. You hate me? I mean, I still come from the old school where I'm not gonna let you get over on me, right? You treat me bad, then I'm not gonna allow people to just walk over me. I'm just not that. I wasn't built that way, right? And I'm gonna hold a grudge until you either apologize or somewhere down the line we have a meeting of the minds. All right, I know I've been ranting. It's 2:36. Let me get to the rest of y'all stocks. All right, that was Apple. Let's look at AMD. There's a semiconductor shortage. So this is a great stock to own. If I was buying it long term, Joel says when a stock drops something like 40%, if you're going to buy something like this, what is it exhibiting, guys? It's exhibiting that pattern. That's when you should be buying it. It's rare that we actually see um, it's actually rare. It's not rare, but the day that we see a trigger, we see a trigger right here, right? Broke the trend, 1, 2, 3. You could be buying this to the upside as an investment. If you want to buy it for a trade, take my classes so you can figure out the exact time frames that you want, right? But how much money can you make? Even if you bought it here, if it goes back to 164, why are we picking 164? Because you got to go with where it came from first, not where it can go, because where it can go is 164 because it's been there. I don't know if it can go to 180 or 190. But if it goes from here to there, I at least know that I can make. And let me take this off. Hold on. It can at least go to what? That's what, 40, 39%. Now I know y'all see 40% down here because when it got down to here, it was 40%. It hit this price perfectly. Y'all know where this price came from? It came from this support right here, right? It came down in price, it hit this support. It didn't quite get to the 200-day. You could have bought it here. It broke 1, 2, 3, bam, you would have made a whole bunch of money. It hit the 200 here, 1, 2, 3. Now that is a big move. So I can see it coming down, maybe going back up, but it can go up this high. That's another 39%. Guys, 39% is huge in this particular game. Okay. All right, let's look at its counterpart, which is Nvidia. All right, so Nvidia is the Beyonce of semiconductor chips. I always say that AMD is like Kelly Rowland. All right, has room for improvement. Even though a lot of you guys will say that I'm just talking about success wise. All right, not looks wise. All right, there's arguments all the time on who's better looking. That's not why we're here today. We're here today to talk about performance. All right, 200-day. 1, 2, 3, quite not up yet. All right. If you want to take a shot here, you can. It's not using the what would Joel do method. But what I like about this is it did break the trend. It went green. It tried to give you that third day and it didn't. It's got to be three sideways or three up, and you can take a shot as an investment. What's an investment, guys? A year or longer. An investment is not 7 days, a year or longer. Okay. All right. So, this is the easiest way to buy leaps. Now, you can make money 90 days out, 100 days out off the 200 day. It's just that the shorter the time frame, the percentage of winning is going to decrease. You go out a year, you almost got 100% chance. I would say a 99% chance of winning if this is angled up. And sometimes it's even as high as 70% if the 200 day is angled down and it hits it. All right. So you got a very high chance that within a year, guys, you're gonna be at least higher than here. So if you want to buy an at the money strike on a leap 12 months from now, this is the time to do it. Let's look at Disney. All right, Disney. Under 130 is a steal. There's a gap to be filled right around. Guys, look at this. I love when I do charts weeks in advance and it bounces off those areas. Y'all see how I put a gap fill right there? And it came right to that same price and bounced up in price $12. I love that. What I don't like about Disney is we got a downward facing 200-day. So if you're buying Disney, it's not for a trade. Well, it can be for a trade if you're using maybe the hour chart, but it looks like it's going to struggle a little bit. Disney is going to struggle until we get a hold of this COVID thing. Once we get a hold of COVID, then you're going to see Disney pop off in price because the parks are going to open back up and it should do well. Now, Disney came from $200. So if you're going to buy it here, where can it go? If it goes back to $200, you can make about a 40-something% return on Disney. This is the types of companies you put in your kids' accounts. All right, somebody said Snap, Google, pre or post split, and Facebook. All right, I think we already looked at Facebook. Did we? Did we look at Facebook? I thought we did. Look at Facebook real quick. Facebook. I put this out 45 days ago. We bounced off of that area perfectly. Look at that. Under 300, I told my members that was a steal, and it was. All right. Facebook is a steal, even though it's a terrible company right now. It was a steal, guys. Look, we went back to 2021, April 2021 prices. It was down 18%. You gotta take a shot. Now, what did I like? 200-day was angled up. We're getting that third. Oh, well, it had that third and then it went under here. So I'm sorry. It was a steal, and now we're way down here. Let me take that back. I still think it's a steal. All right. I didn't notice this way down here. All right. So it was on its way back up and then it broke down in price. So a lot of people are wondering what they should do. Well, remember, if the 200-day is angled up like this and you got caught in this move to the downside, as an investor, guys, you got to be thinking a year out. You just got to. All right. What I don't like is this 200-day looks like it's going to angle down and it might give you some trouble. What's the first place we go back to? Probably this 300. Maybe we fill this gap. 337, if this angles down, is going to be an area it's going to try to struggle from. So even from there, let's say you bought it from here and you rode it back to where it came from. Guys, that's a 44% move. Just going back to where we started a day ago. If we get back to where we came from 24 hours ago, you're going to make a 40-something% return. We ain't even talking about going back to here. That's a 66% return. Okay. So Facebook looks okay. Let's look at Google is pre. So I forgot the dates, guys. Sorry about that. But there Google is going to do a stock split. If you don't know what a stock split is, a stock split is when a stock reverse splits and it's going to go from $280 a share back to 100. All right. Doesn't mean that you're going to lose money or make money. They're just going to offer more shares to the public. All right. It's an illusion. It's an illusion that the stocks do to make you invest in that particular company. So it hit the 200, it hit its highs at 337, and now we're sitting at 3,000, 2862. All right. So Google, from where we are right now, even if we go back to its highs, you're only gonna make about 6%. All right. So Google needs to come down in price for me to buy. This was the place to buy when it dropped 17%. Do I think it has room to run? It does, but I'm already in Google because I bought Google way back here. I know, I'm sorry. It's kind of hard for me to get in something that's already up that way. I would probably trade Google, probably wouldn't invest in it. I've been in Google since it was down here in the $1,500 range. All right. Actually, I got in before that. I got in the March lows. Sorry, I got in right around here. So I'm up over 100%. All right. I waited until we got above here. We went green. I started to buy it. I'm up over 100%. I got to go out of here soon. Sorry about that. As far as pre or post, it just depends on if you're trading it or if you're investing in it. Can it run to the upside? Yeah, you can trade it. What I would do is I would go into the options market and I would see if there's unusual options activity. Like right now, it looks like the 2880 strike is what everybody's buying, but it doesn't really get unusual after that, which is funny to me because you would think because of the stock split, everybody would be buying this stock, and I don't see the buyers. I see 105 here, but that's not enough. I know the stock is expensive, but I want to see 1,000 or more. So I'm not really sold on that Google run yet. But if you want to try to buy it, go ahead and do it. Somebody said, "Whoa, you can be fashionable with a minimalist wardrobe." You sure can. Somebody said, "I just don't care about being flashy. I want to look as common as possible. Good job by you guys." I mean, flashy is on you. You should do things that's going to make you happy. If it makes you happy and you have the money to be able to be a little bit flashy, you can. I just sold one of my flashy cars. So I sold my i8, guys. I loved it. I drove it for 2 years. I loved it. It was flashy. People took pictures of me like I was a celebrity. Everywhere I pulled up, I got VIP treatment. But I now own a Tesla. All right. And it's simple, it's basic, and it's literally the fastest car that I've ever owned and the most efficient. And to be honest, I love this car more than any cars that I've owned. And I've owned Porsches, BMWs, I've owned every single car that's out there. So it's whatever makes you happy. Somebody asked, "Did you see the article CNBC posted about Black Americans being left behind?" Yeah. A newspaper just did an article on me. I don't know when it's going to appear, but somebody in the room said, "Hey, I have a friend that works for this newspaper. They want to interview you." And I wonder if it's the same article, but Black Americans are using the cryptocurrency market as their reparations. This is our way of catching up. We're using the stock market and the crypto market to to catch back up. So you're going to see that a lot as far as us being left behind. But we're getting smarter and more intelligent these days. Someone said, "Yep, no one is more or less important or knowledgeable than me." That's important. So if you're trying to learn something, you always want to learn from people that are smarter than you. Okay. Tanika said, "I want to be." Look, Tanika already wealthy, talking about she want to be wealthy. Oh, I forgot. Wealthy is like 10 million. I know she up there. Um, but uh, but yeah, we want to reach that 10 million or more status. I want to be wealthy. All right. Somebody said Roblox long-term snap. Sorry that we didn't look at all the stocks today, guys. I thought I was going to be able to look at everybody's stock, but unfortunately, I got to get out of here. Roblox looks like it's going down, hasn't broken the trend to the upside yet. So stay away from Roblox. Somebody said Bitcoin. What's going on with Bitcoin? Let's look at Bitcoin real quick. All right, Bitcoin. Same charts. I know y'all are like, how come this guy is able to look at Bitcoin? It's the same thing, guys. People are buying, people are selling, 200-day, all the same. Break trend, go green, buy. It's all the same. Have a time frame. Well, this is what's happening with Bitcoin. All right, Bitcoin. Let me clear trend lines. Bitcoin is dropping in price. We have support at this level here, this $30,000 level, guys. There's a lot of support at 29,000. I sold everything at 50. Then I watched it go to 69. I was mad, and now it's back at 50. And I'm kind of lightweight happy, snickering. I'm like, ha ha, gotcha, crypto market. But now it's on its way back up. So I'm trying to invest in it now. Okay. I'm trying to put money into it now. But if I didn't sell my Bitcoin, I wouldn't have that flashy little Tesla in my garage right now. All right. So I had some guys at some point you gotta sell. All right. At some point you gotta sell. And when you sell, you just got to start reinvesting again. And that's what I'm doing now. I'm now building my crypto account back up, but I'm trying to build it up before we get back to 50 again. But the 200 days angle down, that's not good for crypto. We might be in a crypto winter, so be careful. We looked at AMD. I can't look at Ethereum. Somebody said, preach. I come from a long line of preachers. Maybe it's just in my system. Here's a long question. I dumped about 20,000 on an ETF stock on the past dip, but I'm slightly worried because we are still so overextended on the larger time frame. I know they say we shouldn't try and time the market, and I want to hedge just in case. How far out do you typically buy your puts and when? Guys, puts are fast. When I'm I don't like. All right, so check this out. When I buy puts, I'm in and out the same day. I don't even hold puts overnight unless I'm up really big, up over 100%, and I decide I want to keep holding it. I have the Guys, I don't have to try to catch moves overnight. Y'all see how I woke up today and you still could have made 100% return on Snap. You could have made another 40 or 50% on Apple and you got in late. Guys, you don't have to feel like you missed out on a move. I tell people all the time the easiest way to trade is when you have the most control. So let's talk about control. In order to have control of the market, I can't have overnight sessions. So think about this. The most control is from 9:30 to 4. I have control over what I see on TV, any news related stuff I get. I don't have to worry about a gap in price, up or down. So I have super control from 9:30 to 4 o'clock. If I'm trading the futures market, I have 23 hours of control. I can get in and out when I want, and I can still make ridiculous money. I'm not holding things overnight up to 30 days. I keep telling y'all, I've been here, done that. The worst traders on this planet are the people that try to make money in 3, 4, 5 days. You can't do it because you don't know the type of news that's going to come in. An earthquake can come in and tear up your option. Elon Musk can tweet something, and that's the end of your trade. Anything can happen and spook the market, and it's over with. So you make the most money when you go 30 days or more, or in and out the same day. I've been saying this for years. Anybody that tries to object to that, they try to trade 1 to 30 days, you don't hear from them ever again, or they hide and they don't show you what they're making. Try to stay away from 1 to 30-day trades. And when I say 1 a day, even overnight trades, guys, is not good for your health. You want to be able to go to sleep and comfortably go to sleep. My investments are 10 years out. I can still go to sleep. I do not want to make an earnings play and try to trade off these earnings. I ain't never in my life ever met anybody that was successful off earning plays. And I'm talking about successful as far as time. I've seen people make money if you bought Snap or whatever within 24 hours. Yeah, you would have made a lot of money. I get it. But if you stay away from 1 to 30-day trades and anybody teaching 1 to 30-day trades, you're going to be better off because 30 days or longer or in and out the same day is the way to go, in my opinion. It's the most control. If I don't have any control, I can't make money. I think crypto have numbed me to these drops in stocks. Right. And that's what it's supposed to do. And if you're a trader, if you're an intraday trader, it's going to numb you to investing. It's going to make you laugh at moves like this. If I can make 100 or 200% in one day, I ain't tripping off of an 18% drop. It's funny. I like to come in and create laughter in the room off of bad situations, but Joel ain't. The old Joel would have been throwing chairs out the window, but I'm in a better space now. All right. And I want you guys to do the same thing. Marco said that's why it's good to have two accounts, investing and trading accounts. That's right. And that's what I teach in webinar week. How long do you think it will take for Apple to get to the $800 level post 2021 split? Well, how much is Apple now? It's a very easy question. If Apple's $200 right now and you're expecting it to go to 800, that's 4 times its value. How long did it take for it to get to 4 times its value now? Well, 40 times 4 is going to give 170. So the answer is The last time it was $40 was back in 2019. So if you're expecting it to grow that much, you got to give it at least 3 years. All right. In 3 years' time, it can probably get to that $800 level, which is what, a $8 trillion market cap, which is crazy. Somebody said webinar week is well worth it. I made that initial investment back several times over. It's $95. Take the class. Do yourself an honor. Someone said, thank you. Well, I try to do my best. Denise, can you show that technique again? All right. I guess that was the what would Joe do technique. The technique then would be only for very short. No, the technique is used for everything. That's not very short. The technique I just showed you guys, hopefully the what would Joe do method is for investing and it's for trading. Remember, the 200-day acts as that buffer of knowing bullish or bearish. But then if you're intraday trading, you're going to use the Ichimoku the same way you use the 200-day moving average. Very, very simple. Fifth graders gets the concept. Somebody said they're looking for NVIDIA to that's Charles, and Charles is a very smart guy, guys. But when people call out trades, including myself, you still got to do your due diligence because it's a hypothesis. Anything can happen. Denise said, thank you for teaching your strategy. Somebody said, how do you know when to get out? Well, the question is, what was your goal? That's how you know when to get out. Whatever your goal is, that's when you know when to get out. Have you reached your goal? If you haven't reached your goal, then you stay in. I know I keep it as simple as that, but that's exactly how it is. If that's been a problem for you where you don't know when to get out intraday or investing, then you either need to book a consultation with me one-on-one, or you need to attend webinar week. Sorry, we weren't able to look at Riot blockchain. We'll look at it real quick. All right, Riot blockchain is in the gutter. Why are y'all buying this right now? Stay away until it starts to go green. Joel keeps it simple. Like, don't buy until people buy. When people buy, it goes up. When people sell, it goes down. Wait. Somebody said, isn't it going to fill that gap going back to the upside on Facebook? Oh, yeah. Remember, 80% of gaps fill. So they're talking about this gap right here. So I don't know what gap you're talking about. Maybe you're talking about one of these gaps. The only gap that's on this chart there is, duh, this gap. Yeah. At some point, Facebook is going to fill this gap. And you should be able to make a 44% return from here. If it goes lower, the more money you're going to make. Someone said, wow, y'all still going. Yeah, I'm about to leave in 2 minutes. All right, get his class. It's worth it. I didn't pay these individuals to do this. All right, guys, I'm coming to you guys from Decatur, where it's greater. You need to put it out in the atmosphere if you want to be a millionaire. You're not going to get there if you don't put it out there and let the atmosphere guide you. I think just by being on this call, you have the right energy. You just do, because I'm projecting that energy. You feel that energy, which made you decide, hey, let me watch this crazy guy today, even if you're at work, because the goal is financial freedom, but there is a way to get there. It is hard. It is hard because you got to put the plan in place. But once you put the plan in place, everything becomes easy. Coming to you guys from Decatur, where it's greater. Good luck. Happy Friday. And I'm out of here. Peace.